Very good evening to all of you. Okay. Hello, everyone. Very good evening to all of you. And so I welcome all of you to this last session of this webinar, International Tax Series webinar. So as of all of you are aware that today's session is on transfer pricing, basically the basics of transfer pricing. So most of us, as being a practitioner in tax arena, are aware of that transfer pricing is one of the very key area which was introduced around 2 decades back in India, and as of now, it has been one of the very key practice area for many practicing firms. Friends, historically, this was a limited area which was practiced by Big Four and other larger multinational firms. However, in the recent past, we have seen many Indian boutique firms are coming out in this area and marking the subject. Friends, today's session is also very important as we shall be learning basics of transfer pricing. As believe me, personally, I have been into subject and international tax and transfer pricing for around a decade, and I have attended many webinars and seminars wherein generally the discussion is around on the larger subject or the key subject or key debated areas like AMP, royalty, etc., etc. Generally, in many webinars and seminars, basics of transfer pricing are not discussed, which is generally helpful for the young professional or someone who is new wanting, who is new venture to the subject. So this session we have on this session we have invited our learned speakers who would be sailing us through the basics of the transfer pricing, which would be helpful to understand the subject's basic and to starters and learners. As a learner of tax student, it would be helpful to public at large. Now, for the today's discussion, we have two very keen speakers on the subject. Our first speaker is Mr. Naman Sirmal. About the Naman Sirmal, as you all of you may have seen him in very many webinars and seminars, as he is very known face in the webinars, and generally he is learned speaker. His core area of expertise is international taxation and transfer pricing, and he has also written many publications in ICI journals, NIRC journals, and other and he's a part of many committees on international taxation on various forums, which includes ICI, Bombay Chartered Accountant Association, and Ease of Doing Business Committee of Young Indian of Jaipur, and member of Rajasthan State Development Council of Asokam. So I welcome Naman Sirmal ji. So Naman Sirmal will be and in our other panel, Mr. Gaurav Goel is also with us. So Gaurav Goel is also an international taxation and transfer pricing expert, and he is helping his clients to represent in the representation before IT, AT, and High Court. So he is also very marquee on the subject matter, and he would be helping us to understand the basic of transfer pricing. Uh, about his uh, about his accolades, he is a special invitee to the Committee on International Taxation (ICI), International Tax Committee of NIRC of ICI. He is also co-opted member on the Committee of Strategy, Perspective Planning, Monitoring of NIRC of ICI. So this is about the introduction of our speakers today. This session was conducted, was initiated and thought by Sumit Gargji, who is founder of the CASA, and he is also generally very active on the on learning things. So with this, I would like to hand over the mic to our learned speakers and would like to learn about the today's subject. Thank you all.
Amitji, thank you for introduction. And first speaker of the today's session is Naman Sirmal ji. So Naman ji, welcome to you. And thereafter, second session would be taken up by Gaurav Goel ji. And I hope everybody have enjoyed last two sessions. And today also, basics of transfer pricing, understanding of the transfer pricing would be a great, fruitful session. So over to you, Naman ji.
Thank you, Sumit ji. Thank you for inviting me, and it's always a pleasure to speak on forum of CASA, and I hope that it will be fun today also. I'll share my screen and then we can start. Is my screen visible?
Yes, sir, it is visible.
Okay, great. So very good evening to all the participants. I hope you had fun last 2 days, and it was really a good session. I was talking to Sachin ji, also Smita ma'am, and really very interesting topics. Thanks to CASA for picking up international taxation, which is sometimes seen as a domain of bigger firms. But I am really happy that they have been a torchbearer and spreading this. International tax, the knowledge about international tax into small and medium firms. So that's really interesting. I would also like to thank my team member Harshita Dariwal and Jyoti for helping me in preparing this presentation. I hope you like the effort. So every session has some ground rules. Let's go through them one by one. Why are we doing this session in this international tax arena? 2 days international tax, 1 day TP, because I believe TP is an integral part of international tax practice. And for a small and medium practicing firm, you have to have it if you are doing in a cross-border area. What are we going to do? It's understanding basics. So anybody who is already doing a lot of transfer pricing, the session is not for you. The session is someone who has heard about transfer pricing, had a fair bit of idea about, let's say, income tax, but do not practice transfer pricing day in day out. So we are doing to understand the basics of it. How are we going to understand? Through some definitions and few examples. So that is how we are going to do. Very cautionary thing. TP is very fact specific. So something which is applicable to one case may or may not be applicable to your case or to other case. So don't take all TP case laws or examples just from the result of it. That is also applicable for all other cases. But yes, TP is very fact specific. All views are personal. Obviously, the revenues view or the other council view could be completely different. Let's have fun. Okay, for next 70-75 minutes, which I am speaking, I want this session to be very interactive. There is this chat box freely available. Whenever you feel that you have any question to put, please feel free to put that question. Whenever I pose a question, I request all of you to reply. Let's have it interaction, because otherwise it feels like I'm speaking through a laptop and you are just listening to a wall. So the more we interact, the more fun it will be. So let's have fun while interacting. So that are the ground rules. I hope they are clear. What's an agenda for my session before Gaurav ji picks up other part? So basics of transfer pricing I'll take for 10 minutes. Associate enterprise and deemed associate enterprise, let's say 30 minutes. And international transaction and deemed international taxation for 15-20 minutes. And then we can jointly take Q&A towards the end. Or you can pose a question if I feel that needs to be answered at that point of time. I would answer in that flow. So that I'll check my chat box regularly and keep answering it. So basic of transfer pricing, I always love telling stories in my presentation. So here is one story, and I request all of you to participate and to answer. So there is this normal scenario. There is this brother called Bunty and his sister called Bubbly. Bunty, as you see, is a very mischievous child. Bubbly is like God sent angel. Everybody's favorite, parents' favorite, and she never does anything wrong. Bunty does every day do a lot of things wrong and always get a reprimand or always get some kind of dant from his parents. So that's the normal scenario which is there with a brother and a sister. One day their parents were outside the home, and this our Bunty fellow, he broke a vase. So उसने से एक vase टूट गया उससे एक, and he was really terrified. What do you think his parents will do when they will be back? क्या उसके parents को डांटेंगे? Will their parents scold him, or what will be the reaction? What do you think? Just put in a chat box. Just wanted to have some interaction. So what do you think his parents will do? Will they scold him? Will they say, okay, Baba, done, koi dikkat nahi hai? What would be the general reaction of a normal parent? Okay, what would be the general reaction? Will he get some scolding? Will he, slapping? So Karan says slapping. Somebody's answer something else, that yes, he will get some kind of scolding. But let's say, all of us would feel yes, he would get some kind of scolding. But let's say it's not a normal scenario, but both. So Sunilji is saying both, slapping and everything, that would happen. Scolding, slapping, everything will there. But it's a normal scenario. We turn to a Mentos scenario. What happens is this brother goes to his sister and asks, see, sister, I've done something terribly wrong. I will get a lot of scolding because of that. Uh, could you for once take this blame on you? Could you for once take this blame because you don't do anything wrong? Could you for once take this blame to you? And sisters being sisters, they are like God sent angel. She tells, okay, I'll take this blame. Now, what do you think? Will parents scold her that much? Will parents scold her that much, or will parents scold her a little less because she doesn't do she's not that mischievous? So no, so parents will obviously not scold her that much. So Tanvi says no, little less. Megha says little less. Okay, so yeah, all of us are saying will not scold, let it go. So Ghanshyam says no, Karan says no. So all of you says no. She might get free because she does not do this that often. She is not in the bad books. So what has actually happened, and what has actually happened? The blame has been eroded and the penalty has been shifted. Okay, so blame has been eroded and penalty has been shifted, and that's what I would say. There's kind of transfer from a blame from a high tax jurisdiction to a low tax jurisdiction is actually I would say transfer pricing. So because this person, this Bunty, was a high tax jurisdiction, profit over here would get highly taxed. He transferred her profit to Bubbly, which is a low tax jurisdiction. She does not get that much. And all together as a group, they got a little less scolding. Do you think Bubbly will do this? Would take blame for any person in his surrounding, or only because it is his brother, she has taken that blame? What do you think? What do you think? Would she take blame of anybody for a padosi ka bhi? Yeah, would she be only happy taking the blame on only because of the brother? So only because there was this associate enterprise, only there was this related party, somebody would take a blame. Only because they were one group, they would take this blame, and only because there was this one group, there would be a tax planning. Only for this brother, this would happen. So this is what transfer pricing is all about. If you understand this, you will understand transfer pricing. And I'll explain you by way of, let's say, a more mathematical example which you understand transfer pricing from. So Bunty India, unrelated party, sale of 120, cost of 60, sale of 120, profit would have been 60. Bubbly Singapore, third party customer, selling at 140, total tax is 2 rupees in, let's say, just fictitious figures. Total overall tax burden of group is 20 bucks. But because it is between related party, between associate enterprise, Bunty India has transferred her profit, transferred her blame from Bunty to Bubbly, only billing for 60 bucks, and therefore the profit over is zero. And tax, because let's say Singapore has a 10% tax, it is fictitious figures. They only pay tax, all the profit or the blame has been shifted to this country, and the overall tax burden of group is only and only 8. So what has happened over here? हमारा टोटल टैक्स है 8 हमारा टोटल टैक्स है, 12 हमारी टोटल टैक्स सेविंग है, और बाकी पैसों से पार्टी हो रही है. So this is what normally before transfer pricing people used to do. So to prevent such kind of manipulation of the pricing of associate enterprise, a legislation was introduced in Finance Act 2001. So no more party, no more transfer of blame, no more transfer of profit, and no more transfer of taxation. So that what is transfer pricing. If you like this example, or maybe you understood transfer pricing better because of this example, do write in chat box. I will I will like it if the feelings have actually reached to you, if you have understood the concept of transfer pricing in this. Thank you, Karan. Thank you, Megha. Thank you so much. Let's keep interacting in such a manner. Thank you, guys. Thank you so much. So this is what is transfer pricing, to protect to protect the tax base of one's country because of associate enterprise. Thank you, Vimal. Thank you, GD. such kind of transfer pricing legislation has been brought. Any income arising from any international transaction or specific domestic transaction shall be having compared to arm's length price. So what will the tax officer do? They will say, you do transactions such as unrelated party would have done, and accordingly and only accordingly pay tax. So even if Bunty has sold this for 60, they would say, no, sell this for 120, show this profit 60 and pay 30, pay INR 18 as a tax. So that is what transfer pricing does. So that's why transfer pricing is there. And therefore, so there are two important component of transfer pricing. A, associate enterprise. So how to define which parties are related, whether only brother will be included or also cousin will be included, okay, or padosi will be included, or a girlfriend will be included, who are related party. Okay, so there has to be some definition, and that definition, one part is related party, and what kind of transactions between them would be covered. So for that, we have one definition of associate enterprise, another definition of international transactions where transfer pricing is applicable. First, we will understand associate enterprise. Meaning of AE, which participate directly or indirectly or through one or more intermediary in the management or control or capital. So kind of if you can control them or manage them, then so a brother can control her sister can control her brother, therefore they're related party. A parents can control their child, therefore they're related party. So who can control? Okay, or let's say a brother sister do not control each other, but their parent control each other, they also will become an associate enterprise. So who participate in the management or control. Okay, now this management control is not defined, but earlier section 6 with respect to residency, they should define management and control, and therefore management control capital, that is very, very important. Okay, and management and control, maybe you can take up from that definition, which is now amended since place of effective management guidelines were introduced, but still we can take some idea out of that. So it's a principle-based definition, meaning of associate enterprise, where you see where you have a control, and then where you have whether directly or whether indirectly, wherever you have a control or management or capital, okay, and that is something you would fall into associate enterprise. So this is a broad-based, very subjective definition. To reduce the subjectivity, deemed associate enterprise is also being prescribed, and it's a rule-based definition. It's a rule-based definition. It's an objective definition. No need to prove anything subjective. Okay, no need to prove that there is a management, because if it is something like that, if the thresholds are met, you would be an associate enterprise. And I have tried to explain these examples through some kind of everyday characters which we see on TV or on movies, and I hope you will like them. If you like any one of the examples, do give a thumbs up or something like that on a chat box. We'll be very, very happy. So those are 13 such situations which has been prescribed. Okay, let's go one by one, each of them. Section 92A to A, control of voting power. One enterprise holds directly or indirectly shares carrying not less than 26% of the voting power. So Jetha Inc. holds 100% stake in Daya Limited. They would be considered as a associate enterprise, directly or indirectly. Okay. So two important things emerge out of this. One, how does one compute the indirect holding? Okay. So let's say a company is holding 100%. Behind that, the company is holding 50%. Would you consider this as a 50% or let's say a proportionate? So there is no clear-cut ruling for that or clear-cut idea, but I think the proportionate holding would be a better way to hold this up. Secondly, would preference shares will be part of that? Ideally, preference share does not give you voting rights, so only equity shares should be part of that, the calculation. Third important aspects, directly or indirectly. Let's say somebody has a stake 10% directly and 16% indirectly. Would you consider this as 26%? Or you would consider this only directly or, because it does not say directly and or indirectly. It says directly or indirectly. So would you consider this separately, or would you join them and then treat? A better idea would be to join them, because that's the intention of the law. You can't just surpass the law because directly or indirectly it says separately. Okay, so I think we will take few pointers on each one of them whenever the situation comes in. So this is first. Second, Jetha Inc. also has 26% control on Babita PLC, and obviously we have seen that 100% control on Daya Limited. So therefore, both of them, Babita PLC and Daya Limited, both of them will also be an associated enterprise. Okay, so this is fairly simple. Loan. SBI Limited has given a loan to Malaya Inc. Okay, so a loan advanced by one enterprise to other enterprise constitute not less than 51% of the book value of the total assets of other enterprise. Not 51% of SBI, 51% of Malaya Inc. Okay, though now it is zero, but 51% of Malaya Inc. If there is some kind of loan given, then loan of let's say we are seeing 75% of book value total asset, they have given a loan, okay, then they would be also related party because they can then dictate terms. Okay, so that is something. So it is substantial from the borrower perspective, not from the lender perspective. It's very important. There were also few queries whether the advance received towards some business activity, would this be considered as loan? Our opinion is that no, it is not considered as loan. Obviously, if the advance is pending for 5 years, then obviously it is a pseudo loan, and therefore that should also be considered. But a normal advances should not be considered as a loan. Okay. 92A2D. Wi-Fi Inc. guarantees 10% of borrowing of Hubby Limited. Guarantee. She has given a guarantee that whenever she will be there, Virat will play better in the stadium. Okay. So she has given that guarantee on the borrowing. Let's say on the borrowing. So if you're giving guarantee on 10% of the borrowing, then also you are a related party because then you can dictate terms. But it does not include a performance guarantee. Okay. It's only with respect to borrowing. So Wi-Fi, if she is Virat will perform every time I am in the stadium, then obviously that does not count. Guarantee more than 10% of total borrowing. It's only with regard to the borrowing and not with regard to any performance guarantee. So next. Control, anytime you feel any, or if you like an example, please do post it. If you have any question, do post it. Control over board of directors, not less than 50%. So more than half of the board of directors are appointed by other enterprise. Okay. So ACP, you have seen this fellow ACP obviously has such a clout that he can appoint any number of directors in CID Limited, any number of actors in CID Limited, and therefore both are AE. But the important things are difference between entitled to appoint and actual appointment. Over here, the language uses are appointed by the other enterprise. So the actual appointment needs to be seen and not the entitlement to appointment. So that's very, very important. It's an actual appointment needs to be seen for this clause, not an entitlement to appointment. Okay. Now ACB became so famous. ACB became so famous that even because he can just kick the door and solve cases. Even FBI is impressed, and FBI also gives him the right of appointing the directors. So ACP appoints director on FBI Inc. also, and ACP appoints director on CID Limited also. Then also, okay, because he is here, he can are appointed by the same person, and therefore both of them, FBI Inc. and CID, will also be associated enterprise. Okay, so that is very, very important. Okay, that is very, very important. But one thing to notice that commonness of directors of not covered. Like if they have 5 common directors, A, B, C, D, E, and CID also has A, B, C, D, 5 common directors. Common directors is not a cause of associate enterprise. You have to have a voting right. It is not covered over here. They may have a very, very common directors, but if they do not have common shareholding, it will not be considered. So let's go further. Dependence on enterprise for use of brand, know-how, patent. So manufacturing or processing of goods or article or business is wholly dependent, wholly on the use of know-how, patent, copyright, trademark, license, franchisee, or business, or data, or drawing. then or which the other enterprise's owner and in respect of which other enterprise has exclusive rights. TK Inc. Manufacture products under know-how owned by EK Inc. Without EK Inc., TK cannot survive. So if it is wholly dependent on the know-how, patent, okay, any manufacture or processing of goods or business. So it's a manufacturing, processing of goods or any business. So it's a complete thing. It could be trading, it could be service, is dependent on EK Inc. Both of them would be A. Two important pointers. Does it mean enterprise paying royalty? All enterprise paying royalty will be deemed as A. So anybody, let's say, starts a business and he's paying royalty because he's procuring or maybe manufacturing, and his business is dependent on other person. Will he become A? It's a very fact specific. If your business is wholly, and again, does wholly mean substantially? Let's say Maruti is depending on Suzuki, but it sells 2 cars of Hyundai, just buy and sell by its true value. By its true value, it purchases and sell, let's say, 1% of sales. Is that enterprise fully dependent on Suzuki because of the royalty? Yes or no? These are open questions. Wholly, when the legislature has used the word wholly, I would say it should be wholly. It should not be substantially. And I would say just because you are paying just the royalty because of your manufacturing process, you may not be deemed as but there's a case of Honda which says yes, royalty. If you're paying a royalty, you could be there. But I have a different view. I will say just because you are royalty, you have to have some other conditions of control, and then you can. That is very important. I don't think so. Just because you're using and paying royalty, you will become an associate enterprise. So that is something needs to be taken care. Next, 90% or more of the raw material and consumable required for the manufacturing or processing of goods are supplied by other enterprise. So Preetham Limited deals in cushions. 90% of whatever Preetham Limiteds produce comes from old songs. Okay, so old songs Inc. deals in cotton. Raw material and whatever it is required is done by, purchased by Preetham Limited from old songs. We have to see from the perspective of purchaser or raw material, not from seller. So old songs can have 50 different customers, Anu Malik Limited or anyone else. But Preetham Limited is using old songs for its production of cushions. Okay, and therefore they could become an A. Another important thing is the prices and the other condition are influenced by such other enterprise. Now the subjectivity comes to play. How do you prove that the prices and the other condition are influenced by such enterprise is subjective? So in a rule-based definition, a subjective condition, is been introduced, and therefore it becomes very difficult in this situation to prove it up. But yes, this is something we need to be seen, and because it is 90% of the raw material and consumable, it seems that this clause will not be applicable to trading in a service concern. So this will be only be applicable to manufacturing concerns. Okay, so old songs Inc. sell its raw material, which forms 90% of its raw material. 90% of Preetham Limited purchases it's from old songs Inc. of raw material consumable, and therefore they could come to A if and only the prices and the other condition related to supplier influence. How do you say what is influence? You come, you negotiate, you say old songs Inc. let's say is the biggest producers of cotton in India, and they dictate prices. Can you say that they influence the prices and therefore they are in A? Very difficult, because if they dictate prices, they would decide their own terms. I'm not very sure. So it's a difficult in a rule-based scenario. A principle has been introduced. Next is sale dependence. The goods or article manufactured by one enterprise are sold to other enterprise, and the prices are influenced by such other enterprise. This is one of the most difficult to defend or to even to press charges, because it does not say 90% tense. The goods or article are sold to other enterprise, and the prices are influenced by such other enterprise. It could be very small fraction. It could be 5% also. So this is a very small, most confusing clause, because even for a small transaction, okay, even for a small transaction, this could be an issue. Okay, and this again not to be applicable to trading and service concern. But very important. Remember, even for a small transaction, this could come to a picture because this is influenced by the Sonu Limited has an influence of T2 Inc. Okay, even for a 5% of his decisions, even for 5% of his sales, if he has an influence, then a transfer pricing officer can allege that prices are conditioned by influence by such other enterprise. So it's a very difficult thing. Again, as I said, maybe Sonu Limited has that kind of power that he can dictate T2 Inc. And therefore, somebody could say, okay, this is an AE transaction, but somehow these two, the previous one and this one, I believe it's a very subjective thing. Let's go ahead. Where one enterprise is controlled by an individual, the other enterprise is also controlled by such individual or is relative or jointly by such individual and relative of such individual. So Rich Dad Limited is controlled by Mr. Mukesh Ambani. His relative, Mr. Anil Ambani, controls Poor Dad Inc. So even if the control is there and they may not talk to each other, then also because they are the relative, it's very important that this could be a related party, this could be an associate party relationship. So TV provision does not, okay, there is a relative definition, but let's not forget that, let's not put into this, maybe some mistake is there. But the control is not, there is no, the control definition is not provided. So you can get 26% or a 10%, whatever needs to be defined. As such, percentage is not defined over here. Now come to the HUF one, which is I think the 11th condition, 92A2K, where one enterprise is controlled by an HUF. So Ghassidara Mithai Wala HUF controls Ghassidara Mithai Wala, and member of HUF Lalu Ramji controls Lalu Ram ke Samose. Then they can also be it's all about control. There's no specific threshold or something like that. It's all about control. Then both of them, Ghassidara Mithai Wala and Lalu Ram ke Samose, would also be as a related party or associate enterprise. Firm AOP BOP holding of interest not less than 10%, where one enterprise is a firm, AOP or individual, and it holds not less than 10% association, then 10% only, then also there could be an associate enterprise. Interesting part is that it does not say indirectly, it only says directly. So you may have an indirect holding which may not come into play, you can come out of that, but it only says directly and it does not say indirectly. Last, any mutual relationship which can be prescribed, anything is not been prescribed as of now, and therefore it's $1 million question as of now. Nothing has been prescribed, so nothing can be added. So this is the 13 conditions. Okay, one very important things come into picture. If you like the example, again I'm telling you, please do send a thumbs up or something like that. I will feel happy, my team will feel happy that whatever examples they have been created have been appreciated, and maybe you can remember those while CID or anything or Preetham, and that would be fun for you to remember. That was our attempt. An important thing would be an interplay between the principle-based condition and the rule-based condition which we have seen. So principle-based condition says management and control. A rule-based conditions, these 13 examples are given. What will happen when one of them will not be meeting each other? Are both of them important? Are only one of them important? So that interplay has always been talk of the town, always confusing everybody. So I try to resolve that by way of particular example. So a management control capital MCC conditions are given, which given by 92A1. An exhaustive list or an illustrative list, whatever you say, has been given by 92A2, that these are the 13 conditions. Okay, and other may or may not be there. So what are the possibilities which may be covered into A? What are the possibilities which may be covered into A? A, you see both the conditions. You see the exhaustive list also, and you see management control capital only and only when both are satisfied. Only and only when both are satisfied, then only it will go to 92A. It will go into associate enterprise. Second, you say this is just an illustrative list. There could be others also. And when they satisfy the criteria of management, control, and capital, then it is a A. So this is another transaction, another way of looking to it. Third way is, this is an exhaustive list. This is an exhaustive list given. When this list is given, I will not see anything. I will just tick on this list. I will be very happy and I will not see whether there is a management control capital, because this list itself says that once this is there, you will believe, you will deem that there would be management control capital, and there could not be any other thing. There is only this exhaustive list. So A, you need to see both the condition. B, management control and capital is important, and these are just example, and there are other conditions as well. And C, you have this exhaustive list and you don't care, you don't see any other thing. If you fall into this exhaustive list, you are A. If you do not fall, you're not A. A, B, C. Which one of you would you select? Which one of you is your understanding of associate enterprise? Would you have to see both of them? Would you just see just the exhaustive list and nothing else? Or there could be something out of this. This is just this illustrative list, and there could be others. What is your understanding? A, B, or C? Can you write on chat box? Oh, Sunil ji has some question also, but I'll take that later now. Can you write it on chat box? A, B, or C? Anybody, if the people are listening over there. Okay, so let's see if it appears that people are confused. Okay, and it rightly so, because so many of us were. Okay, and Vikas say A, you need to see both of them. Okay, you need to see the exhaustive list, and then you need to see. So there were a decision of Page Industries which said like that. Okay, but you know, Weird Gems a decision which was there. It says this is just an exhaustive list. You just go and you just enjoy this list. If it is not part of, if it is fine, you do not need to check this management control. This is an exhaustive list, and if something is not falling under this list, do not bother. It is not an associate enterprise and therefore need not to be checked. Though I would believe that still after the exhaustive list, you may have to see management control capital, but it was affirmed by an Gujarat High Court, and then an SLP filed by department was also, was also rejected. So this could be considered as the law of the land, but obviously very fact specific. Be very sure whether you fall into the four corners of associate enterprise or not. Few other things before we venture into international transaction. I've already covered 45 minutes. So far, so good. Is the speed fine? Is the language dialect fine? Agar kuch bhi change karni, anything, do let me know. Would be happy to, for next, let's say half an hour, would be happy to reshuffle things or something like that. Anything needs to be explained, we can discuss. Kuch bhi ho to boliye. One important term is enterprise. Okay, so we need to see this enterprise as a definition which says a permanent establishment who is engaged in any activity, production, or something like that, storage. It appears to be a definition for somebody who needs to do a business. Okay, so let's say enterprise, let's say an individual, and an individual has subscribed share in the company, but he does not anything. He does not do any business. Would he be A? Would he be A? So it's better to err on the correct side of the law, or on the conservative side of the law, and therefore, though one may argue when fighting the case that enterprise, all person are not enterprise. Okay, all person are not enterprise, and you can argue that, but once on a filing stage, or a consulting stage, I would say it's much better to take this as a I would say as a associate enterprise. The definition of enterprise is what includes a permanent definition, even though P is not a separate legal entity. So what do you think? A foreign company having an Indian branch, would that be part of, would TPP applicable to it? An Indian company having a foreign company having an Indian branch, would TPP applicable to it? Any idea? Any idea? Because they are one and the same entity. They may not fall into those 13 category. Shareholding नहीं होगी, directorship नहीं है, सब कुछ है ही नहीं. Sunil ji is saying yes, it would be there. So there is a specific circular which says yes, a foreign entity having a branch, because there is a transaction and branch is taxable in India, that would be treated as a separate entity, and therefore transfer pricing will be applicable. Let's flip the case. Indian entity having foreign branch, would TP be applicable? Indian entity having a foreign branch, would TP be applicable? Maybe you take a minute to answer that, and I'll have a water. Indian entity having a foreign branch, would the same resolution be there or something different? So Vikas says yes. Sunil ji says yes. So interestingly, see, Indian entity having a foreign branch, the profit is already there in India. Profit is already going to tax in India, because a foreign branch profit is already going to tax in India. So as Ghanshyam rightly pointed out, it may not require TP. So strictly speaking, TP is not required, because whatever you do, expense less, more, whatever, it will be merged in India only. No? So why it's the need of TP? Okay. One interesting point is that our the treaty, we have treaties with 100 countries. Our treaty does not, most of the treaties do not mention those 13 conditions. They only say control and everything. Can you say when control is not there, you are out of associate enterprise? This obviously could be challenged. It's very, very important that associate enterprise relationship, it's any day of the year. Once in any point of the year, you are associate enterprise, then for the full year, you may have to maintain the TP documentation, you have to fall into that place. So it's very, very important to understand that even for one day, if you fall in associate enterprise, you could be into, you would have to go into TP mode. So it deemed days because of holding, because of management, activities and control. Segregation is there. You could understand this, just to summarize this portion of it. So any question regarding to A? Sunilji's question, maybe I'll take a bit later towards the end. Any question regarding to A, or we move to that term international transactions? I'll take maybe around 20 minutes, 10 minutes for Q&A if it is required, and then maybe we can proceed further. So if there are no questions, I will take it further. Now, once we have ascertained that there are associate enterprise, we need to see which transaction. So Vikas has raised hand. Yeah, Vikas, please feel free to maybe unmute yourself and speak and ask question. Vikas?
Hello, sir.
Vikas?
So the branch is specifically not a TP. No, TP provision is not applicable to the foreign branch of Indian entity.
Foreign branch of Indian entity, yes. So foreign branch of Indian entity, anyways, the profit is clubbed in India. Okay. So you do not, therefore, because whatever you will do, you will reduce the profit, increase the profit of the foreign branch. It's already being taxed in India. So India will not lose anything. Okay. So therefore, in my opinion, that there is no TP requirement per se for it. Only when the case is different, an Indian foreign entity having an Indian branch, and because only that India's branch profit gets taxed in India, and therefore TP regulation will be applicable.
Okay, but I have read in the law the branch of Indian entity, foreign branch of Indian entity, the TP provision.
Maybe you can point out in the law. My understanding is such that that would not be covered.
I agree with your point. But I have read somewhere, right now I am not remembering, but I have
not an issue, mate. We can take it offline.
I will revisit the provision. I will revisit the provision.
Absolutely, we can take it offline. Perfectly fine. You can connect with me, and maybe if it is there something, then we can obviously get it correct.
Okay, sir. Okay.
Thank you. Okay, now coming to international transactions. So earlier the definition was, I would not say narrow, but there are not Yeah, so Gauravji rightly pointed out, there may be requirement in the provision of foreign law because then the inverse situation is there. Okay, but however, not applicable in India, obviously, yes. So the similar requirement, like what Vikas mentioned, the flip requirement will be there in the foreign country now. So in India, we are talking about India as of now. So section 92B of international defines international transactions, a transaction between two or more associated enterprise. So it has to be obviously either or both of whom are non-resident, or even two non-resident people. Remember, either or both of whom are non-resident. So both of them also could be non-resident. In the nature of purchase, sale, lease of tangible, intangible property, or provision of service, or lending, or borrowing money. All these things, so many things are there. Or any other transaction having a bearing of profit, any other transaction having a bearing of profit, income, losses. So anything and everything, it is considered. So transaction between associated enterprise, at least one of them should be NR, both of them could be NR, having a bearing of profit, income, losses, assets. All of it is there. Sorry. So now Finance Act 2012, because there were a lot many things, whether share capital, Vodafone cases, those are, you know, these are transaction or not. So they have already included, they are trying to give an explanation which is somewhat I would say outside the ambit of main provision also. Tangible property, I understand, purchase, sale, intangible property, purchase, sale, transfer, capital financing, so long-term, short-term borrowing. So borrowing per se, 100 rupees borrowing is 100 rupees borrowing. You may pay a lower interest or a higher interest. Interest on borrowing, I understand, could be a transaction, but long, short-term borrowing, advance receivable. Again, a long-term advance could be a problematic, but a normal advance receivable payable, that's part of the game. That's part of the same transaction which we have already been benchmarked. Okay. All other services, that's fine. Business restructuring. So this has enlarged the scope, and therefore we need to be very careful while filing 3CB, while preparing transfer-based strategy. Now there are deemed international. So everywhere in our tax laws, there is a deeming provision. One normal provision, then people play with loophole, there are deeming provision. So deemed international transaction. So transaction between enterprise and unrelated third party. There could be transaction between enterprise and unrelated third party, but there exists an agreement between A and a third party. So there is a transaction between enterprise and third party, but there is an agreement between A and third party. Terms of such determined as are determined by A and the third party. So any party could be a third, either enterprise or A could, or both are could be non-resident. One of them should be there. Third party can be non-resident or resident. Okay. So deemed international transaction would also cover transaction with both of the contracting parties are resident. So it's a deeming fiction, because what people used to do is that interpose a third unrelated party in between, transaction between A and B who are AE. They used to interpose a Z between them, and therefore the transaction went free without TP, without reporting to the government. But because of this deeming provision, now let's say an associate enterprise sells to unrelated person, which indirectly sells to this Indian enterprise, then this will be considered as a transaction between associate enterprise. Okay, and therefore you need to report as a deemed international enterprise. And there are high chances of getting a scrutiny when you report a transaction as deemed, because they will always smell something fishy out of this. Okay, there are high chances, not 100%. There are high chances. So be very, very careful if you have a deeming international provision. If you are a chartered accountant signing 3CB, take an MRL from your client that there are no deeming international transactions, because nobody would come to know the scope of the transaction one step behind. If it's a transaction between an unrelated party, you really would not come to know whether the party behind that party is your associate enterprise. So better to take an MRL. Few cases I've explained of deemed international transaction. There is a foreign company who has an Indian company, AE. B Limited is also an AE, and these both of them are resident. Both of them are resident. Even if there is a foreign transaction, there is a business restructuring which is done on the behest of foreign company. This could also come into a deemed international transaction. Then a foreign company, as a global vendor, okay, it's a global vendor, and it directs that you sell to my Indian company also by the terms agreed by foreign company. Then also this could be a deeming international transaction. So he directs this unrelated vendor to sell my Indian company at this rate, at this quantum, and all that thing. Then also this would be a deemed international transaction. Next, you have an agreement with a third-party manufacturer for purchase of goods, and let's say there is just a transaction between these two, but the terms and substance. So what would happen? A foreign company would say, Indian company would make the products at 100, sell this to 102, and the foreign company will bill them, the contract manufacturer, of 10 rupees more for services. In fact, this 10 rupees should have gone to Indian company. And therefore, because the terms and conditions are written by a foreign company, this would also come into an international transaction kind of relationship. So very, very important, because you yourself will not come to know, but it's very, very difficult by way of audit, by way of checking their accounts, that somebody who's signing a 3CB would come to know. And therefore, an MRL is very, very important to be taken on these cases. Various permutation combination, maybe you can read that by yourself. Very, very important that, see, all 3% are resident, obviously there is no international transaction. The AE and enterprise are resident and other person non-resident, it is not a. All other cases, it could be a deemed international transaction. Because earlier there was, before 2014, it was there that the AE has to be a the third party has to be non-resident. Now it doesn't really matter. So if you follow any one of these conditions and you know that transactions are influencing, wherever you find in audit that there are one bulk transaction from one party, what's the nature of it, you can ask it. But again, as I said, it's very difficult, better to get an. Now let's see some key pointers, important things, okay? And I'll seek your opinion. We have, let's say, 15 minutes left before Gaurav ji picks up. So I will spend 10-15 minutes on this, and maybe if you wish required. Some key pointers which have come into international transaction, and some of them we could not even imagine whether these are international transaction or not. One of the major, which the moderator also mentioned in the starting, advertising, marketing, and promotion, so AMP expenses. So let me give you a scenario of AMP expenses. Okay, let's say a company like a Samsung. Samsung spends a lot of money on marketing, and I am seeking your opinion on the same. Samsung spends a lot of money on marketing. Let's say 5% of its sales is marketing, hiring Indian players and spending on that. But because Indian players visit outside India, they play outside India, they have global reach and everything. Samsung as a whole, Samsung as a group gets benefit. Should Samsung India charge Samsung group, or let's say that foreign company or the holding company, because it is expending some, is doing some expenditure, but the benefit is availed by the group as a whole? Do you think, I seek your opinion, do you think that this is an international transaction? Do you think this is an international transaction worthy of being benchmarked? Because Samsung India is spending so much money that Samsung group is getting benefit. Do you think such kind of transaction could be benchmarked? So there is a lot of debate, a lot of many cases is with there, Samsung, Nokia, Adidas. What do you think? What is your opinion? Just a common man understanding. What is your opinion? You know, such kind of transaction, do you think are international transaction or not? Yes or no? Because this is a very, very burning issue. So depends on P. Yes, Sunil say yes, Dean, Vikas says yes, depending on the P. Gitesh says depending on the P. Okay, so maybe they have some kind of permanent solution in India. Let's not go that way. So this is very, very difficult to benchmark. Anyways, this kind of marketing and are very difficult to benchmark. How much of the benefit is Samsung taking? How do you get? So Taxman did a very smart thing. They said, okay, what others, what LG, what Panasonic, what are they expenditure of their salary and their sales, and what are you expending of your sales, and the difference is what you are attributing. You should attribute to your global company. In my humble and personal opinion, until unless something is proven, let's say a Samsung India pays for a football World Cup, which is not really or become a main sponsor, and that is not paid by the main company, then you can come into picture, again fact specific. But a normal expenditure, you cannot attribute it to the group company. This is my take on that. Very difficult to attribute, very difficult to benchmark, very difficult to calculate what is an ALP. And it's a very trite position, settled position, that a transfer pricing officer or an assessing officer cannot step into the shoes of businessman and to decide what to spend, what to not to spend. There is no third party, there is no related party into the transaction. And therefore, in my humble opinion, such kind of transaction are not worthy unless the fact pattern is such that this is the abuse of the law, then it's a different story altogether. But in normal scenario, no. Let's pick up the next takeaway. So again, this is an example picked up from a case law. Okay, there is this company A, assessee, who provides design, installation, and commissioning service. The company B provides its sale of gas turbine, which is an A. Okay, now Public Works Department issued tender for supply of gas turbine with some eligibility, like a VAT registration criteria. You need to have a VAT registration criteria in India, and Public Works Department supplies this thing. This company A has a VAT registration, this company B does not have a VAT registration. Okay, fine, so far so good. Tender was issued in company A as named, whereas in contract, scope of work was clearly bifurcated between company A, that what company A would do and what company B would do. And billings and payments and everything are also done separately. So installation service was done by CR company A, sale of gas turbine was done over there, payment they received completely, okay, completely segregated, only because of the VAT. The contract was received in company's A name. When only the contract was entered as C, can it be said that SSC provides sales, marketing, and after-sales service to its A? Can you say that company A has provided such kind of services, and therefore they should be reimbursed, or rather paid for the sales, marketing, and support? And the facts clearly specify that it is only for the VAT purpose and not for others. And company B was separately doing their work, company A was separately doing this. What do you think your opinion is? Can you say that the SSC provides sales, marketing, and after sales support? So these are all deeming international transaction. International transaction per se, those conditions are pretty simple. And once it is there on a related party schedule, we will find out. But will you be able to find out such situation? What do you think? Is this a international transaction worthy of being put into a transfer pricing study report or not? What do you think? Or what factors would say yes or no? Can some margin be provided just for VAT registration? Because they had VAT registration, can they say, okay, I will claim 1% of the sale because I had VAT registration? If the VAT registration would not be there, you will not be able to claim. आप claim ही नहीं कर पाते. अगर VAT registration नहीं होता, तो आप claim ही नहीं कर पाते. You would not have got, the business. Can you say something like that? क्या लगता है? So obviously, if a TPO says, they would try to put this as a sales and marketing service. Okay, so this was a case in 2020 because of V solar turbines, where High Court ruled in favor of associate. There is no material to show that associates provide any marketing services, and therefore you cannot go just beyond. So there is a secondary adjustment nowadays, that if something is pending, some amount is pending and that has not been received, would that amount be still, would interest on that amount be still qualified as an international transaction? Sale of jewelry, payment was delayed from the normal credit period. Is the delay in payment prior to introduction of secondary adjustment and international transactions? What factor? So it's very important, normally happens. So secondary adjustment comes after 1 crore and all. There could be someone say, okay, secondary adjustment is there, but I can still treat this as a transaction delayed in payment in AE. So very, very important factors to be taken, whether the sales are so much higher that ALP covers extended period, can when the profit. Okay. Is interest not charged from others also? Can it say the interest, if interest is charged from someone else, then only interest is charged on someone else? Is the company debt free? It does not matter whether it gets late payment or not. Okay. So nowadays, this transaction is obviously akin to granting loan, and therefore you benchmark it. Earlier cases or something different. Key takeaway number 4: two different cases, and I will again seek your opinion. आपसे आपका ओपिनियन लगेगा इसमें. कंपनी ए बिजनेस ऑफ शिपिंग ऑपरेशन क्रूड ऑयल ट्रांसपोर्टेशन, एक लेटर ऑफ नेगेटिव लीन दिया बैंक को कि वी विल नॉट ट्रांसफर आवर शेयर्स इन ए. ओके, we would not transfer our shares in AE. Should company B compensate company A for the same? Because letter of negative lien दिया है, the undertaking for not transferring certain share. उसी के बाद post that only the bank gave loan to company B. Should company A in India be compensated for such transaction? Yes or no? Yes or no बोल दीजिए. What do you think? Should company A be compensated? So Ghanshyam says yes, Sunil says yes, Rohit ji says no. Okay, very nice. So we have a different opinion. Okay, so same was done in SR shipping case, and tribunal says yes, it's a letter of negative lien. You are performing something. Okay, and therefore you should get some amount, 0.25%, 0.5% of something like that. Another case, only a letter of comfort was issued that we will not dispose of certain share. It was just a letter of comfort. It was a Tata case. Okay, and in this case it was just a letter of comfort. No active things have been done. No particular steps have been taken. It's just a letter of comfort to the bank, and therefore no compensation. Again, very fact specific. As I said, the information is details are available in the I would say presentation, and therefore I will not need not go too much depth into this. So you may take writing of stock, which was earlier purchased from AE. So you purchase a stock from AE, okay, and post that you do not use it. You write that off. Do you think this is an international transaction, or it's a unilateral transaction? International transaction or a unilateral transaction? What do you think? International transaction or a unilateral? So obviously it is not an international transaction because you purchase it. Later on, you wrote it off. You purchase on a ALP, that's fine. And once it is into your domain, all the goods all the risk with respect to those goods is into your domain, and therefore it is not an international transaction. In respect of corporate guarantee, and I'll take maybe A view and a B view. So an X person is giving a corporate guarantee for B, it's A. It can say it's a shareholder activity, and it's not I do not want to get money out of that because it's my baby, it's my entity. I need to support it. If I do not support, who else will support it? Okay, and therefore we take a group approach, group as a whole. On the other side, there are some case law which says no. Would you give a corporate guarantee to someone unrelated party? क्या आप किसी unrelated party को भी guarantee दोगे? हाँ या ना? No, obviously. Why would I give corporate guarantee to किसी unrelated party? And therefore you should charge for it. What is the group's opinion? What do you think? Corporate guarantee is a shareholder activity? Corporate guarantee is an international transaction worthy of benchmarking or not? Yes or no? Simple. Yes or no? Karan says no. Yes. Like bank charge for that. Sunil ji says like, yeah, bank will charge karte na yaar. So obviously, yes. So yeah, more or less the legislation is developing in such a manner that yes, and after 2012, the position has changed. Yes, such kind of transaction is also, I would say, if receipt against payment to A becomes unrecoverable, you have sold for worth rupees 100 rupees. Now it becomes Unrecoverable. You are writing bad debts. Is bad debts an international transaction or not? Bad debts of AE. Is that and how do you benchmark the bad debt then? Is bad debt an international transaction or not? What do you think? Obviously, answer depends on facts and circumstances. If A is responsible, if the other person. So, so independent party has not paid them because our A is saying, I'll not pay you. Okay. So whose risk it is? It is very, very important in the agreement to be seen whose risk actually it is. And whoever risk it is, and then it becomes a very, very important thing to see. And then only you can, it's very, very fact specific, both ways could be there. Domestic transfer pricing. Okay, so now domestic transfer pricing is also there. Why domestic? Because there could be cases of various cases where your profit, SEZ and everything, and those kind of, SEZ or new manufacturing company. This if there are a lot many new manufacturing company, there could be high cases of domestic transfer pricing, whether with this new manufacturing company, which is your related party, you have to benchmark the transaction as per the transfer pricing provision. So yes, specified domestic transaction when the aggregate value of transaction increased 20 CR, any transaction 80A, 80IA, any 80IA 10, so wherever there are exemptions, and those exemptions is specified in this specified domestic transaction, and more specifically to 115 BAB, where the tax rate would be 15%, then there will be an inclination to transfer the profit to all this entity and not keeping the profit over here. So I think wherever the kind of situation will be there, it's very, very important that this specified domestic transaction will come into the picture. So last slide to sum up, check whether parties are associated enterprise or not, whether they are associated enterprise, whether they fall into those 13 conditions, whether there is an MCC, management, control and capital, whether such kind of situation is there, and then it becomes an AE. Then check whether transaction is international transaction / deemed international transaction, specified domestic transaction, whether the transaction fall into the ambit of it, whether or not, and if both yes, then move forward to find an ALP, which obviously will be taken by Gaurav ji in the next part of the session. So this is where I stop. Any questions, comments, suggestion? If you like the session, then obviously please give a thumbs up or something. Would be very happy. My team would be very happy to see it. And Vikas has a question. Maybe Vikas, you can. I'll unmute you. Yes, Vikas. Feel free.
Okay, unmute.
Okay, बताइए बोलिए sir.
So are you, my voice is coming or not?
Absolutely coming.
The Indian company is having a foreign branch, which is having a contract with the foreign company. Some foreign client is there, and we are having the foreign branches. So the contract is such type. We have to depute some person over there, which will do the supervision, buying, etc. work, and whatever the main consultancy we will be done from the Indian head office, means Indian company. So and the invoices will be raised from the foreign branch to the foreign client, and money also received by the foreign branch.
Sure.
Okay, so now there will be the revenue, but from the point of costing, there will be a less cost because main consultancy has been done by from the Indian company. So how to transfer this cost to the foreign branch, and whether it will come under the ambit of the transfer pricing or international transactions?
So see, in India, as I said, Indian company having a foreign branch, all the profit, whatever profit loss on which India will pay tax, okay, will remain same whether you transfer it over there or not. Okay, because positive, negative, whatever will come, the Indian branch profit will be consolidated in India, and you need to pay tax on it. Okay, so it will not matter from Indian tax point of view, but from that foreign company, let's say Singapore. In that country, that would matter whether you are paying tax rightly or not. Okay. In this case, in your case, because the expense are there in India, you would be having a high inflated profit in branch. Okay,
Yes.
and you would pay additional tax in branch, and therefore, rather than those Singapore people are very concerned. Okay, it would like, how would you transfer that profit so that you pay less tax over there? In India, in effect, you will pay that tax only. In India, it will not matter. But that jurisdiction may have question.
So
Is the answer clear?
how to transfer? This expenses need to be transferred there, na, to reduce
You can raise an invoice to your branch, na, and then it can transfer. Na. Inter branch तो कर ही सकते हो आप.
So by journal entry or some invoices we have to.
हाँ, by invoices ही होगा ना, क्योंकि वो ब्रांच है, फॉरेन ब्रांच से पैसा आएगा, जो भी आपका टोटलिटी में होगा, तो मे बी जनरल एंट्री से भी कर सकते हो. सो आई एम नॉट अवेयर ऑफ द अकाउंटिंग ट्रांजैक्शंस कैसे होंगे, और व्हाट मैटर जीएसटी. ठीक है, सो यू कैन डू इट इन दैट मैनर, जैसे भी आपको ब्रांच से पैसा लेकर आना.
But it will come under the cross charge scenario, no? This is the cross charge invoices.
हाँ, इससे क्रॉस चार्ज इनवॉइसेस, इससे क्रॉस चार्ज इनवॉइसेस ऑब्वियसली. सो आप कोई खर्चा कर रहे हो, जैसे हम इंडिया में ब्रांचेस में बांटते हैं, इट्स द सेम थिंग. ठीक है, आज हम इंडिया में ब्रांचेस से बांटते हैं और फॉरेन में बांटते हैं, फर्क नहीं है, क्योंकि इंडिया के लिए तो आप ऑल ओवर इंडिया एक ही टैक्स पे कर रहे हो.
If you allow, Naman ji.
Sorry,
but just wanted to add something, if you allow me.
गौरव जी हाँ बोलिए ना.
तो बेसिकली विकास जी, आपका जो क्वेश्चन है ना, बहुत सिंपल है. आप अगर सिंगापुर में मान लीजिए ज्यादा टैक्स पे कर देते हो, तो अल्टीमेटली क्या करोगे? पैसे का आप क्रेडिट ले लोगे इंडिया में.
एब्सोल्युटली,
ठीक है ना. इंडिया में डबली टैक्स इनकम हो जाएगी ऑफ द ब्रांच, एंड यू विल क्लेम द फॉरेन टैक्स क्रेडिट. So instead of cross charging it, just giving you an opinion, I understand it is not asked for, but my opinion is, instead of cross charging the Singapore branch, let it be. You pay tax there, claim the credit in India. Neither
Absolutely.
the Singapore tax authorities have any problem, nor Indian tax authorities have any problem. Why do you want to create any problem with Singapore authorities at later stage? Then they will question your cross charge.
Absolutely,
Okay.
I agree with your opinion.
But problem is that we are having the tax losses in India. Our profit is in the loss from the point of the taxes. So I cannot take the FTC of the whatever the tax paid in the Singapore.
अब आपने fact.
That is the problem.
then it becomes a very, then it becomes not a theoretical question, but actual facts.
Actual fact is this.
Fair enough. Now I understand why you want to cross charge.
Yes. So while cross charging, whether these provision of transfer pricing and international transaction, whatever in the section 92 will become operative or not? That is my question.
The moot question is, ट्रांसफर प्राइसिंग कब आता है? बेसिक समझ लेते हैं एक बार. ट्रांसफर प्राइसिंग तब आएगा जब इंडिया से प्रॉफिट शिफ्ट होके इंडिया से बाहर चला जाएगा.
Absolutely.
Right? आपके केस में प्रॉफिट अगर आप बाहर ले भी जाओगे तो अल्टीमेटली वापस इंडिया लाके ही टैक्स करना है. ब्रांच है. Had it been a subsidiary, then this question would have made sense.
हाँ, बराबर है.
Right?
Okay, sir.
So last question.
Thank you, sir.
एक क्वेश्चन और ले लेते हैं जो नाम क्लियर नहीं है. Please ask your question. I think no. जी.
See, the question is, there is a non-resident person who is a director in an Indian company. He is an independent director. Now, he is also a partner of a USA-based partnership firm there. Now, if this Indian company is paying consultancy fee to this USA firm, where this person who is an independent director is also a partner, would they be called associated enterprise?
So because he's an independent director, I would assume that he would not have kind of a control and management in India, okay, given the limited facts. And therefore, if it does not, if he does not have a control and management or any kind of, control in India, then I would not believe that this would come into an international transaction space. or even in A.
Okay, thank you.
So all queries resolved till now. Namanji, you want to say anything before concluding?
Oh, thank you so much. Thank you, Sumit ji, and thank you, Kasa, for giving me this opportunity. Thank you, participant, for asking question and being interactive. Sachin ji is also there. Happy to see him, Sachin bhai. And over to you, Gaurav ji. Looking forward towards your session.
I would first like to congratulate Namanji for the beautiful presentation. So I have never seen such a presentation with Jethaji and Dayaji everywhere.
Thank you.
So this is something very,
Wonderful.
very interesting. And I can see my face freezing on the Zoom call. Is it the same for everybody or?
Yes. Some problem is there.
Some problem is there. Yeah.
Yes,
Some problem is there, Gaurav bhai.
So first of all,
Now, okay.
hearty congratulations to Namanji. Very beautifully made presentations. And that brings me to the point that I don't have such funky presentations. So please bear with me.
No problem, Gaurav ji.
I'll just share my screen.
मुझे याद है नमन जी ने पहले भी जब लिए सेशन तो हमारे घर में अगर पेड़ उगा है और फल उसका दूसरा
Absolutely.
तो always creative presentation so that members can keep in mind.
No, I really enjoyed the presentation. Seriously.
Thank you, sir. Thank you.
So, hello friends. I hope you enjoyed the first part of this topic, basics of transfer pricing. I'll be taking it forward from where Naman left it. I would like to thank Sumit Garg ji and Kasa for having me here. And there is some problem with my video, so I'll be stopping this video so that it does not create any issues.
Okay, Gaurav ji.
So I hope you can see my screen.
Yes, Gaurav ji, perfect. You can start.
So as Namanji clearly pointed out, what is an associated enterprise? When is transfer pricing applicable? What is the international transaction? What is a deemed international transaction? Now, since we have that kind of knowledge at hand, the question comes what to do with all this information and how is transfer pricing effectively made applicable to the cases. So we'll discuss the applicability first, and then we'll move on to the arm's length price, which is basically the blood of this entire provision. That is how to calculate or how to determine what is the arm's length price. So first we'll understand what is the arm's length price and how to determine it. And the incidental or the important issues to determine arm's length price, which is the FAR analysis. How do we select the most appropriate method to determine the ALP? Who is the tested party? What is the profit linked profit level indicator? And finally, we'll discuss about the form that all the professional colleagues sign at the time of compliance, which is Form 3CEB, and making of documentation. So this would probably give you a fair idea that what exactly the transfer pricing provisions, how are they operated and how to take it forward for all your clients. So let's start with the applicability. Most of it is already discussed. I'll just give you a snapshot. So there have to be 2 or more enterprises, first of all. So at least 2 enterprises or 2 or more enterprises. These enterprises should be associated enterprises as explained by Namanji during his presentation. Once we finalize that these two enterprises are associated enterprises, we'll have to see whether they enter into a transaction or not. So if that transaction qualifies to be an international transaction or a deemed international transaction, and for that matter, a specified domestic transaction, in that case, the applicability or the transfer pricing provisions get triggered. Now, once transfer pricing provisions are triggered, what is the consequence? The consequence is that you will have to determine the arm's length price of the transaction. Let it be an international transaction, deemed international transaction, or a SDT. You will have to first compute the arm's length price of this transaction. Then there is a requirement of maintaining a documentation as per section 92D and rule 10D. A lot of documentation is to be maintained. After that, we'll file a form 3CEB every year with the government of India. And finally, we'll ensure this compliance under section 92E to avoid certain penalties. Just to give you an idea, what are the penalties? Penalties can be as high to 2% of the international transactions involved or the transactions involved. So that is why it becomes very important to comply with these provisions. So without wasting too much time, because I have limited time, I have too much to discuss, I'll just move on to what is arm's length price. Arm's length price is something which two unrelated or two uncontrolled people or unrelated transact at in a uncontrolled transaction. अब इसके दो में आपको legs बताए. First leg is the transaction must be between two independent persons. Independent parties or independent person would mean, say for example, Namanji and I, who are not related otherwise, enter into a transaction of, say, purchase of land. Now this transaction will be between two independent parties and under uncontrolled and they should be uncontrolled transactions. So for example, in this transaction, say Namanji come to my office, keeps his gun outside and asks me to transfer this land for a lower price. Do I have an option to say no? जान है तो जहान है. मैं ये बोलूंगा सर जितने पैसे देने हैं दे दो. तो will that transaction be a uncontrolled transaction? Sir, let's make it interactive. So once this transaction is not an uncontrolled transaction, the price cannot be the arm's length price. Arm's length price is a price which is when two independent people enter in an uncontrolled transaction. Normal day-to-day transactions with unrelated people would be at arm's length. You go to market, buy something from an unrelated person, that transaction would be at arm's length price because he is not forcing you or coercing you to buy that particular product at a particular price. Am I clear? So arm's length price, as we discussed, would be a price जो दो independent लोग आपस में transact करेंगे at a open market price without any coercion or any control. अब हमें ये तो समझ में आ गया सर कि what is the arm's length price. The next question is how to determine arm's length price. So when we say arm's length price is to be determined as per certain methods which are prescribed by the government of India under the law, under section 92C. So these are several prerequisites before we go on to analyzing and determining the arm's length price. First, we'll have to identify the international transaction. What is the transaction? So there could be different transactions. There could be a transaction of purchase and sale. There could be a transaction of provision of services, or probably a transaction of providing corporate guarantee, corporate financing, or something else. So first of all, you will have to identify the international transaction. Then you will have to understand what were the function, asset, and risk employed for carrying out that transaction. Why is this important? We'll discuss it in the next slide. So function, asset, and risk profiling is the prerequisite of determining the arm's length price because that would give the character to the transacting party, and that character would be used to find comparables. Right? Please let me know wherever it is not clear. I'll try and put it in more simpler words. Being a person who is doing a transaction, first of all, you would have to understand that what all activities or what all risk have I assumed or what all assets have I used to perform that transaction. Higher the risk, higher should be the reward. Higher the amount of functions that I perform, higher should be the reward. Higher the number of assets or the amount of assets that I consume or I employ for providing that service or providing that transaction or completing that transaction, the higher should be the profit that should be derived out of that transaction. So these are the three pillars that would help you define the arm's length price. The next important thing is to determine what is the most appropriate method that is suitable to the international transaction that you have undertaken. Now, say for example, I purchase a pen from a AE. So that is a distinct good. So when I'm buying a distinct good from a AE and that particular good is available in the open market as well. So I am not talking about a specific or a unique good which is only available with my AE, or it is not comparable with the other goods which are available in the market. In such a transaction, probably cup would be the most suited method. By cup, I mean comparable uncontrolled price method would be the most suited method, because we would be able to find a uncontrolled price for that transaction, which is being done between two independent parties. Whereas, say for example, there is an Indian entity which is a captive unit of a foreign entity. Now, if an Indian entity being a captive unit of a foreign entity is providing certain services to the foreign entity, finding an uncontrolled transaction of the similar nature is not possible, because a captive entity would always be controlled by the foreign entity. In that case, you cannot apply cup. You will have to go on to other methods of determination of ALP and find which is the most appropriate method. We'll discuss the methods in the further slides, but just to give you an idea, it is important to first finalize which method would be the most suited, and then we'll go on to further go and benchmark the transaction based on that method. Similarly, it is very important to identify who is the tested party. किसकी transaction को, एक transaction where there are two people, the transaction can be benchmarked from both the sides. So for example, if I say I am selling certain goods to a AE and A is buying certain goods from me, so there are two ways of benchmarking this transaction. Either you benchmark the sale of my sale, or you benchmark purchase of my AE. Either ways, same transaction will be benchmarked. So first of all, you will have to choose who is to be benchmarked, whose transaction is to be benchmarked, who will be the trusted party. My financials you want to benchmark or my AE's transactions. Then we'll be finding out if there is any uncontrolled transaction. Why is uncontrolled transaction finalizing or finding an uncontrolled transaction important? So there is something called an internal comparable. What by internal comparable I mean? A transaction that is being done by the same person with an unrelated party, and same transaction is also done with a related party. So the transaction with the unrelated party would become an uncontrolled transaction, right? So once that transaction becomes the uncontrolled transaction and I have done that transaction, that becomes the internal benchmark of the transaction I did with my related party. So internal benchmarks are said to be the most effective benchmarks or the comparables for benchmarking a transaction and finding the arm's length price. कहने का मतलब, say for example, there is a manufacturing entity in India and it has a parent in USA. It imports certain raw materials, say steel, from USA at say $10,000 per metric ton. Similarly, there is another vendor in China, and that transaction is so that the same manufacturing entity is purchasing certain goods, same steel from the Chinese entity at a price of say $9,500 per metric ton. Now, at the face of it, you will say that Chinese entity will be selling Indian entity at a lower price, but I'll give you a little, we'll talk about a little more adjustments here. But at the face of it, I have a uncontrolled transaction with a unrelated party, and the same transaction I also have with a related party. Now, to benchmark the transaction between the related party with the related party, I have another transaction with unrelated party. So I could always say that I buy these particular goods from my related party at $10,000. I buy similar goods from an unrelated party at $9,500. Tax officer may come and say that you are paying $500 more to your related party, but then you can always go back and say there is a geographical difference. I, being in India, purchasing from China, the landing cost is lower. That is why I am buying for 9,500. Whereas I am purchasing from US, there is a lot of landing cost. Still, I am buying for 10,000. If you just adjust the landing cost, the base price would be lower in USA, and I can simply show that this transaction was at arm's length price. Are you guys with me? And is there any questions still there?
No, sir, as such questions to नहीं है. And नहीं.
अब ये सारी चीजें हमें पता चल गई. What is the international transaction? हमने FAR कर लिया, हमने FAR analysis कर लिया of the transaction. We know what is the most appropriate method. We have finalized the tested party, and we have identified if there is any uncontrolled transaction in the company. After doing all this, we come to the comparability analysis. इसमें क्या करेंगे? We'll find out or identify the comparison of specific characteristics of the two transactions. Specific characteristics, like I said, that I buy say pen from a related party, and I also buy similar pens from unrelated parties. So specific characteristics of this transaction is that I am buying pen. Now, if I say I buy Parker pen from my related party and Reynolds pen from unrelated party, so these two transactions are not comparable because these are two unique goods that I am buying. Although they are pen, but you can differentiate between the two pens. They are not similar. They don't have similar characteristics. So characteristics of the goods are to be seen. Then finding out whether differences, if any, between the two transactions can be reconciled. अब Reynolds और Parker हम reconcile नहीं कर पाएंगे, लेकिन यही अगर मैं बोलता कि Rotomac और Reynolds ले रहा हूँ, तो उस केस में क्या होता? We could have reconciled the difference. They are both ball pens, 0.7 mm nib and blue color, similar writing flow and everything. We would have reconciled these differences, right? And we could have used these transaction to benchmark our related party benchmark, related party transaction. Now then we'll ascertain the most appropriate method. अब जो मैं अभी तक आपको example दे रहा हूँ, it is the very direct example wherein the most appropriate method would come to your mind would be the comparable uncontrolled price method. And since we have used this method, I buy Rotomac pen from one person and Reynolds pen from another person. Both the pens are priced at the same price almost, and they are similar goods. So in that case, we can say that since we are buying at the same price, the arm's length price is what I pay to the to the uncontrolled person, and the related party, if I'm paying the similar price, that is the arm's length price. Fair enough. So ultimately, if we follow these steps, we will ultimately arrive at the arm's length price. Now, all said and done, it is very easy to say कि सर फार कर लेंगे, ये देख लेंगे फंक्शन क्या परफॉर्म किए, एसेट क्या लिए, एसेट क्या यूज किए, रिस्क क्या अंडरटेक किया, ये करना कैसे? एंड हमें ये तो समझ में आ गया, इट इज वेरी इंपॉर्टेंट, बट हाउ इज टू बी डन? दैट इज द प्राइमरी क्वेश्चन. उससे पहले एक बार ये समझते हैं कि फार होता क्या है. मैं एक बार बता चुका हूँ, लेकिन आई विल अगेन स्पेंड सम टाइम बिकॉज इट इज अ वेरी इंपॉर्टेंट part of making the documentation also and benchmarking the transaction. When we do FAR, we try and understand the overall transaction that is done between the two related parties. the international transactions. Say, for example, there is a transaction wherein you are providing services to a AE, and these services are in the nature of, say, for example, technical consultancy, right? Now, these technical consultancy services, I'll have to understand what are the functions that I perform while doing these technical consultancy services. Once I finalize all the functions and I list all those functions, I'll be able to find out that what all other companies or other people do similar functions to provide their services. Right? Say, for example, I come to you for an opinion in some law. So you will say, for example, in that case, you will first understand my transaction, then you will analyze the provision of law, and then based on the provision of law, you will provide me the opinion whether something is to be taxable or not, and you will also provide me how to make the documentation of that particular transaction. So that is something, that is the functions that you perform while doing that consultancy. Apart from that, there are other functions. Functions like whether I am required to do marketing for my business, whether I am required to maintain the books of accounts and accounting and legal and HR and all those allied activities, whether I am required to maintain a warehouse, for example, or am I required to, what do you call, recover goods or recover or sale. So say, for example, if my consultancy, or in that case, if I'm providing certain goods, so whether I am also required to follow up for the payments. So all these are functions which are being performed by the party while providing these services or while doing a transaction. Once the functions are clear, then you will see what all assets are being employed. So are these assets only in the nature of tangible assets? So it can be that you are using your own warehouse, you are using your own vehicles to transport the goods to the port and then forward. You are using your office equipments and everything. You are using plant and machinery if you are a manufacturer. What kind of plant and machinery? How detailed is it? That and most importantly, whether you are using some kind of intangible. So when I say intangible, it can be know-how, skills that you have obtained in various years while doing this business, or it could be as complicated as a brand name, or probably a technical know-how that you have developed through research and development. So if all these things are used, so the more complex the intangible that you are using, or more complex the assets that you are using, you will be charging more for your services, or you will be charging more for your goods, or whatever transaction you are entering into with the related party. To give you a small example, say for example, we go to Girish Ahuja sir for some opinion, right? Although ये थोड़ा सा गलत हो जाएगा, लेकिन गिरीश आहूजा सर तो कुछ पैसे ही नहीं लेते, लेकिन say we go to a very renowned, say we go to Harish Salve sir for some opinion, he will be charging us crore of rupees. Why? Because he have that kind of experience, he have that kind of intangibles, right? Whereas if you come to me, I'll charge you a very small amount of money, right? So it is all based on that what exactly is being performed, what is the transaction, what is the level of intelligence, what is the level of intangibles that a person is equipped with. So once that is done, we'll go on to the risks. Now, an entrepreneur will charge you based on the risk he is assuming out of a transaction. Now, say for example, me and my AE enter into a transaction wherein all risks are borne by the AE. I am a low risk distributor. A low risk distributor is a person who does not take any risk of marketing, recovery, or what do you call, of foreign exchange and credit period. Any kind of risk, I am not assuming any kind of risk. I am getting paid on advance basis. I'll be paid irrespective I work for that company or not. I will be paid for the time he has asked me to work, a fixed fee basis, or sorry, on a fixed time basis. So say for example, my AE asked me to work for 8 hours a day. Whether or not they provide me any work to do, I'll be remunerated for that time cost that I have kept for them. The bench strength, even if I am maintaining a bench strength for them, that will also be remunerated to me, irrespective they give me some work to do or not. So if I am that risk free, I'll not be in a position to charge higher margins from the AE. So risk को determine करना बहुत important है, and it is not mathematics. So first of all, we'll have to understand it is not mathematics. It is not कि ये 10% risk है या 20% risk है या 50% risk है. It is more of understanding the transaction and your opinion that what kind of risk are these entities or these parties to this transaction are assuming. I hope this makes things a little clear. So we'll just discuss from this chart, and I have tried to make it very self-explanatory. We'll also share this presentation with you guys. So first of all, we'll determine the functions and key activities of each group entity. Then we'll identify key intercompany transactions, and then income distribution within the group companies to be based on economic value. So अगर मैंने ज़्यादा काम किया being a AE, तो मेरे को ज़्यादा profit मिलेगा. अगर मैंने कम काम किया तो मेरे को कम profit मिलेगा. Similarly, in case of risk, if I am taking more complex, if I am taking more risk which are arising out of that transaction, I'll be claiming more profits out of that transaction. My margins would be higher as compared to a person who is assuming lower amount of risk. Similarly, the assets, if the capital asset that I use are if we are into a very capital intensive industry, we are into manufacturing with huge plant and machinery which has been deployed. So in that case, I'll be taking that kind of remuneration to offset my costs, and accordingly I'll be taking more. So if I'm not using, say for example, if I'm not using any assets at all or a very basic amount of assets, I'll not be charging that much amount. I'll be benchmarked at a lower margin. So we are coming on to now, once we understand what the FAR is of a transaction, what are the function asset risk, just to also make it very clear here. Say for example, there are two or three transactions with the same AE. So if Indian entity enters into a transaction with the AE, say for example, purchase of goods and provision of services and some financing activities. Excuse me. In that case, you will be required to do FAR for all the transactions. So transactions are to be seen independently for doing the FAR analysis. Sorry, just a second.
In the meantime, Gauravji is coming back. I have shared all 2 days video recording along with the presentation. And if you have any further query, you can text to me for anything regarding this 3 days conference. And this webinar will also be shared to you along with the presentation. And wonderful discussion going on with all 6 speakers. Today's Gauravji is a 6th speaker. And any kind of feedback you can share to my number. Gauravji, are you okay now?
Yeah. Thank you so much.
Yes, please, over to you.
So once we have finalized the FAR for all the transactions, the next step is to select the most appropriate method. So what all are the methods? So we can split the methods in two primary buckets. One is the traditional transaction method, so which is comparable, uncontrolled price, resale price method, and cost plus method. So these are the direct methods as per OECD. These are the direct methods. And then we have the transactional profit methods, which are profit split method and transactional net margin method. What is the difference? Difference is traditional methods are specifically based on the transaction and not on the profit. So say for example, if I take the example of the comparable uncontrolled price, you don't benchmark the profit of the transaction in that case. You benchmark the transaction itself. Similarly, in resale price method, you are benchmarking the entire transaction itself and not the profit arrived at. So where you are actually benchmarking the transaction, that becomes the most direct method of benchmarking a transaction. OECD commentary says that wherever direct methods are available, it is better to use the direct methods over the transactional methods, because that would give you a better benchmark or better arm's length price. And finally, we have another method which was prescribed by the CBDT. So there is nothing under the other method. Other method says you just have to prove that this is the fair market value. Prices charged, paid would have been charged or paid in the open market. So it does not provide for any benchmarking or the method of benchmarking. It could be as simple as that you bring in the quote of another person for the similar transaction, and then it can also be used as a other method, as a ALP under other method. But this is the residuary method. So what is important to note here is other method is a residuary method. It would be used only when all these 5 methods fail. If you are unable to use any of these 5 methods, then only you can come on to the other method. Other method cannot be the main method when any of these methods are applicable. So let's discuss cup method now. Abhi tak in our discussion, I have been referring to cup method quite several times. So I hope now some of us would be very comfortable with this method already. Hota kya hai is method mein? So there is a control transaction. Aap ye dekho. In this, associated enterprise is charging $A to a corporate, and an independent enterprise is charging $B to a company. So assuming $A is $10 and B is $20. So I would say that in a similar transaction, when it is a control transaction, this company is charging just $10 from its associated enterprise, whereas in a uncontrolled transaction, where these two when these two entities are independent entities, they are charging say $20 for this transaction. Now, what all other things have to be seen? One, that the product or the transaction is similar type of goods, quality, quantity, features, everything have to be similar. We cannot benchmark two transactions which are not similar. Like I gave you an example of Parker pen and Reynolds pen. These two transactions are different transactions because they are not similar in nature. The quality of the pen is different. The nature of the pen is different. The brand is also a very important point here, because one is a day-to-day use pen and other one is a little more, pen which have some kind of flashy value. So in that case, these two transactions are not similar. Whereas when you buy ball pens, normal daily use ball pens from two different people, one is independent, one is a controlled or associated enterprise, that can be compared because the nature of the goods would be similar, quality and quantity of goods would be similar. When we say quality, again, quality is something very subjective. So you will have to see that it is in the nature that it is so for example, you buy steel from the Chinese entity and also from your USAE. Now, if Chinese entity is giving you 3 mm steel, I don't know the technical terms, but assuming it is a 3 mm sheet, and you are buying 5 mm AE, so these two transactions are not comparable. Whereas if they would be 3 mm sheets bought from both the people, then you could have said, yes, it is a comparable transaction. Next important feature here is, say you are buying something which is seasonal in nature. So a company which deals in fans or coolers or air conditioners makes some purchases from AE in summers, in peak summers. During peak summers, obviously the demand would be high and the prices would be high. Whereas I make the transaction with an unrelated party during winters, when the demand is very low and the prices are low. Now, can I compare these two transactions and say the cup is lower and the transaction, if I have paid more amount to my AE, can the transfer pricing officer say that you have paid more to your AE and the arm's length price is lower, therefore this amount will be disallowed? Anyone? Sunil sir rightly pointed out, no, because again, it is a seasonal good. So the prices would obviously be different and we'll have to make that kind of adjustments if at all we are using these transactions. Again, like in the example I gave you, US and China, geographic market in which transaction take place. It is very obvious that if I buy something from China, the cost of bringing that good or product to India would be lower as compared to something which is bought from USA. The landing cost would be higher, so it cannot be purchased at a lower price. So we'll have to make those kind of adjustments. Embedded intangibles. Anyone can give me an example of this embedded intangibles? Anyone, please raise hand and we can speak. No. Okay, let me give you an example. When you go and buy your laptops from the market, there are two types of laptops available. One which have embedded OS and Microsoft with them. Other one is without any OS. Which one is cheaper? I buy a laptop with Windows and one laptop without Windows or without Microsoft Office. Which one is cheaper? Without OS, obviously. So why is that cheaper? Because you are not getting any embedded intangibles with that product. Now, if tomorrow we try and compare two transactions wherein one transaction had embedded intangibles and the other transaction did not had any embedded intangibles, is that comparable? Can we use it at can we use these two different transactions as cup to each other? No, because the value of intangible is missing in one of the transaction, whereas in the other transaction the value of intangible is embedded. So we need to consider all these issues and all these factors while determining whether a price which is arrived at under the cup method is a arm's length price or not. I hope it is clear to everyone. Shall we move on to the other method? So let's talk about what happens in resale price method. So resale price method is where you buy certain goods and sell it forward. So in case of a trader, we use this method. Primarily, it is being used in the case of a trader. So these goods are bought from one person and sold to another person, and the gross margin earned on the sale, final sale, will be used to benchmark the overall transaction. Now, in this example, which is there on the slide, a company buys certain goods from a associated enterprise and sell it to independent enterprise A. And another company buys similar goods from an independent company and sell it to an independent company C. What is happening here? The cost of purchase in case of a independent company is say 100 rupees. When it is 100 rupees, so if we see here, so purchasing price is 100 and it is being sold at 200 rupees. So what is it doing? It is adding a margin of 50%. We have a 50% margin here. And when we talk about the transaction where I bought certain goods from the associated enterprise, I don't have what, so we have to determine the ALP. So the resale price is 120. And considering in a independent transaction or an uncontrolled transaction, there was a gross margin of 50%, the ALP should be 60 rupees. Is everyone with me on this? Please say yes or no in the chat box. So what we have done here, we have tried to determine the transaction price or the arm's length price while comparing this control transaction with an independent transaction and determining the gross margin of an independent transaction and applying it to a control transaction. So this is what resale price method does when we determine arm's length price from this method, right? What are the main factors which are to be considered? Ordinarily used in case of involving purchase and sale and resale of goods. So as I already told you, it is primarily used where trading is concerned. So in case of trading, we use RPM. Reseller has not physically altered the product. Question is why? Can anybody answer this? Anybody? Sunil sir. I can only see Sunil sir who is active on this. I guess I understand my presentation is not as interesting as Namanji's, but please try and bear with me. So अगर किसी ट्रांजैक्शन के अंदर कोई एडिशनल प्रोसेस हो गया, in that case it won't be, हाँ सर TNMM भी यूज कर सकते हैं, we can also use cost plus method, Sunil sir, but again, so wherever there is a process, it is no longer a reselling transaction. Then it becomes a process. So you are adding value to that product that you bought. So we cannot just apply a trading margin on the purchase price. You will also have to add value or the margin for the value addition on that product that you have purchased from the associated enterprise. So your resale price would also have the margin for the reprocessing. Therefore, reselling will lose its character and it would become a processing transaction. In that case, you can do a cost plus or a TNMM depending on the transaction, but resale price will not be applicable. Again, packaging, labeling, minor assembly are acceptable. So, अब हुआ क्या? Say for example, I purchased some products in wholesale quantities. Say for example, I bought gunny bags, 100 kg each, and repackaged that into 5 kg each packets, and then sold the goods. That is not reprocessing. That is not adding value. I have just changed the packaging, right? So I bought bigger quantities, packaged it into smaller packets, and sold it to independent enterprises. So that is allowed. Reseller does not apply intangible assets. Obviously, wherever there is an intangible asset involved that would add value to the transaction, the primary concern here is that whatever is purchased is to be sold. We cannot change what we are purchasing and what we are selling. अगर मैंने चावल खरीदा है तो मैं चावल बेचूंगा, अगर मैंने गेहूं खरीदा है तो मैं गेहूं बेचूंगा, जैसे मैंने गेहूं को आटा बना दिया तो RPM is not applicable. Right, sir? Shall we move forward? Cost plus method. What happens in cost plus method? So there is a markup on direct and indirect costs. So say for example, just I gave you an example that I bought wheat from my associated enterprise and did some process on it, made it in converted it into flour and sold it to third party. I cannot use RPM here, right? Now मैंने उल्टा कह दिया लेकिन ऐसा समझ लेते हैं. So for example, someone purchased wheat for $50 or 50 rupees and did some process and sold it to associated enterprise after doing that process. So what should be the margin of that process will be determined by seeing what other independent transactions or what other people in independent transaction charges. So we'll see a comparable, we'll find out a comparable wherein a company is purchasing wheat from a third party or an unrelated party. Say it purchases wheat or any other product for 100 rupees, does the same nature of process over it. So it converts into flour, or I'm buying, say for example, I'm buying some spices and converting into powder of that spices. So it is almost the similar nature of process. So if the process is same, I'll buy the goods, apply that process, reprocess the product, and then sell it to the third party. So if we talk about this transaction, I am making a 100% margin on reprocessing. Is everyone with me? Since I am making, so 200 minus 100 is 100 divided by total 200. So it is basically 100% margin there. I am making 100% margin on COGS. So what should be the sale price here? I will make 100% margin on the COGS. So this should be 100 rupees. Everyone with me? Now, yes, please. ask your question.
Can you hear me?
Yes, yes.
I'm saying the corporates, the box in between, in your example,
Hmm.
are they are these two boxes are of same entity or they are of two different entities?
Different entity. So say for example, this is A company, this is B company. This B company, so it can be same company also. So if I'm doing two transactions, one with associated enterprise, one with independent party, so it becomes the internal cup.
So same company is understood, but if these are two different companies, how do you get a data for company B?
That is again, so when we do benchmarking, there are certain softwares wherein we
Okay.
search similar nature of companies who do similar activities.
So you will
So there would
explain
be
that in today's presentation.
we are not discussing, searches today,
Okay.
because that is a very detailed chapter. So we can do it separately whenever Sumitji asks me. Searches would take a lot of time because there are certain softwares. You will apply certain filters. You will see that it is doing certain nature of. Say for, I'll just give you a small snapshot, right?
Yeah, that would be wonderful. One or two examples.
Yeah,
That would be
example.
wonderful. Thank you.
So what happens is, say I am a company who is into this processing, right? So now to find comparables, so there are two ways. One is internal comparable. So assuming this was a company, the same company, so I have an internal comparable wherein I am buying certain goods from an independent company, converting it and selling it to a independent company for certain price. So I get an internal cup. So there is no problem here. What happens when I am not doing this transaction, where this transaction is not available? In that case, what we do is we go to certain softwares like ASTP or Capital Line, Provis. There are a lot of softwares available in the market wherein we search that in a particular industry. So say for example, this is food industry. So I'll search under food industry the companies who are into manufacturing of flour. So if it is, so I'm just giving you an example, or reprocessing of food items, or probably converting of spices into packaged form, or repackaging of spices. So we'll point out a lot of companies which are into similar industry. Then we'll weed out the companies which are not into manufacturing, because this transaction would be considered as manufacturing. So we'll weed out. Then we'll start filtering out a lot of companies. So we'll say, for example, after doing this filter, we get 1,000 companies who are doing similar job. Then we'll start weeding out. So there could be many filters. Say, for example, this our company A has a total turnover of say 100 crore rupees. So we don't want two very small companies as our comparable, right? Because they don't have that kind of cost, so they may be making more profits, or vice versa. So we'll take a turnover filter of say 5 crore rupees and more. So we'll weed out any company which is having turnover of less than 5 crores, right? Then we'll weed out certain companies who are more into other services other than manufacturing. So we'll say that total turnover less than, so manufacturing turnover must be greater than say 75% of the total turnover. So any company which is into commission basis sales or reselling or trading would be then again filtered out of this complete data. Then we'll go to other filters. Say, for example, we'll apply a filter of RPT, that any transaction with related party transaction should not be more than say 25%. So then again, the total list will again be filtered to a lower amount of number. So then we will say data availability. So there must be data of at least 2 years available. So in this way, we ultimately come to a set of say 10, 20, 25 companies, which are now similar to the functions that I do, right? Then I will see whether these companies are functionally similar to me. Then I'll go to their annual reports and see what these companies do. So there may be some company which is into food processing, but it is into meat processing, which is completely a different nature of business. So in that case, probably I'll be again not selecting it as a comparable company, saying that it is into a completely different business, or the mechanics of this business are completely different from my business. So considering all this, I'll then filter out the final set of 10, 15 companies. And then I will compare their margins on COGS and the average of that margin, or probably now I'm not discussing the range concept that we can discuss later whenever we get the opportunity. So just for making it simpler, we'll take the simple average of the margins made by all these 5-10 companies, and that margin, if this company is making while dealing with the associated enterprise, then the transaction value will be considered as arm's length. Or if it is lower, then we'll say that it is not at arm's length. There should be a primary adjustment. Am I clear? Does it make sense? Does it help you to understand, Mr. Alakato? Okay. Fair enough. Sunil ji, which software would be better is completely what all software do you use? Generally, ASTP is one software we always use along with Provis, because that is being used by the department, but that is very, subjective. And yes, obviously, we'll have to see which party would be the tested party. We'll have to. So I have not yet discussed that concept, so I have not discussed it here. First of all, we'll obviously see that which party is to be benchmarked. Shall we move forward? So cost plus method is. So do we understand this method? Shall we move on to the other method? Okay. Now, profit split method. So I'll just give you a disclaimer. This method is not generally used in India. I have seldom seen it being used, and primarily is being used where there are a lot of intangibles involved. So what happens is, in a transaction, we combine the entire profit from a transaction, irrespective where it is, arising, and that transaction, that complete or the undistributed profit is then distributed as per the contribution and the residual analysis. So contribution is that who is performing more functions with respect to that transaction. So he will get the fair share of that particular profit. And similarly, if some entity is holding some intangibles, that entity would take the fair share of that transaction, of the profit arising from the transaction. So this is how profit split method works. I am not getting into the details because practically I don't believe that you will be using this method too much. I would like to quickly shift to TNMM method, because this is the most used method in India, and you will probably be using it in day out while doing your transfer pricing compliances. So this brings me to the most important method, and I am left with how much? 40 odd minutes, out of which I have to, leave around 20 odd minutes for the question answer round. So that is only 20 minutes. So I'll just focus on this now. What is TNMM? As the name suggests, net margin arising from the transaction where we benchmark that net margin from a transaction, that method is called transactional net margin method. Now, as against the earlier methods that we were discussing the transactional level methods. Now we are discussing here the net margin out of the complete transaction. Till now we were talking about the gross profit margin or the margin on the COGS. So these were the PLIs there. By PLI I mean the profit level indicator, where either the GP margin or the actual transaction value in cup, or when we talked about cost plus method, we were talking about COGS margin. So now we have moved on to the net profit margins or the net margins out of a transaction. And why it is important? Because TNMMs are generally easily available because you don't need to adjust too much. When we talk about the net profit of the transaction, it would have a lot of adjustments already while arriving at the net margins. So if we go by OECD, TNMM must be used where the direct methods are not, it is not possible to use the direct methods, but TNMM have its inherent benefits. It is very easy to use. You can simply, so for any transaction, you will see what is the net margin which a unrelated party dealing with unrelated parties is making while doing all these services or all these expenses, or while paying all these expenses. So once the net margin is benchmarked, so it is the reverse process. We say if the profit margin of a company dealing with the AE is similar to the profit margin of a company is dealing with unrelated parties, that means whatever cost I have incurred which is paid to the AE have to be correct. Otherwise, I would not have arrived at the similar net margin which is being earned by an unrelated person dealing with an unrelated person. With me? तो हम क्या कह रहे हैं यहाँ पे कि अगर मेरा प्रॉफिट ही बेंचमार्क हो गया तो ऊपर के सारे खर्चे ऑटोमेटिकली बेंचमार्क हो गए. करेक्ट. सो इसमें क्या हो रहा है, हमने ट्रांजैक्शन के बेंचमार्क करने के बजाय हमने उस ट्रांजैक्शन से अराइव होने वाले प्रॉफिट का बेंचमार्क निकाल दिया. करेक्ट. अब हम इसमें करेंगे क्या? फॉर एग्जांपल, एसोसिएटेड एंटरप्राइज sells certain goods to company which sells these goods at rupees 120. Now, similar in an unrelated transaction, some company purchases similar goods or some goods in the same industry and sells it for 150, makes an operating profit of 15 rupees. That means there is an operating profit margin of 10% in this entire transaction. So I am only talking about the net margin. अब हो सकता है कि मैंने ए को 10 रुपए फालतू दे दी हूं और किसी और को कम दे दी हूं. So we are not getting into nitty-gritties here. I am going by the final number of the profit, which is 15 rupees on a sale of 150, which comes out to be 10%. So till the time my net operating margin from this transaction is 12 rupees, which is 10%. No question asked, the entire transaction is said to be at arm's length. Understood? Are you guys with me? Let's take an example. XYZ Inc. parent company, it is providing raw material and technology know-how. अब दो अलग-अलग transaction है. To ABC Limited. ABC Limited is engaged in manufacturing of auto components. XYZ Inc. provides raw material and technical know-how to ABC Limited. ABC Limited sells the manufactured auto components to third-party customers. Facts are cleared. Now these are the assumptions. Cup method cannot be applied since ABC export manufacture auto components only to XYZ Inc. and no information pertaining to external cup is available. CPM cannot be applied due to non-availability of gross margin data. RPM cannot be applied since there is no purchase from AE and sale to third party. Since there are no integrated transactions or transfer of unique intangible, PSM is not appropriate. अब हम क्या कर रहे हैं इसमें? इन assumption से हम क्या कर रहे हैं? We are trying to figure out what is the most appropriate method. हम कप नहीं लगा पाए, क्यों नहीं लगा पाए? क्योंकि ABC export manufacture auto components only to XYZ Inc. हम कॉस्ट प्लस मेथड, क्योंकि हम यहाँ पे प्रोसेसिंग कर रहे हैं तो हम सीपीएम क्यों नहीं लगा पाए? हमारे पास ग्रॉस मार्जिन डेटा नहीं था, फॉर एग्जांपल. आरपीएम cannot be applied since there is no purchase from AE and sale to third party. So it has to be a sale to third party and purchase from AE direct. So TNMM is the only alternative left. So what is the most appropriate method here? TNMM. Now search was conducted on public databases and resulted in 12 companies. जो हमने कहा quantitative and qualitative screening कर ली, and finally it resulted in rejection of 10 companies. Finally, we have 2 companies left, P Limited and Q Limited. These are the comparable available to us. Now, let's do the analysis. TNMM कैसे लगाएंगे? ABC Limited, tested party हमारी है. When we talk about, एक बार हम पहले tested party पढ़ाएं, उसके बाद करते हैं सर ये. एक मिनट. So Sunil ji rightly said पहले tested party पढ़ लेते हैं. What is a tested party? In any transaction, there would be at least two enterprises involved. There would be 2 enterprises, right? Now, which is to be taken as tested party? That is the primary question here. So, a tested party must be a party which is the most uncomplex or the least complex transaction or the least complex enterprise of the 2. अब मान लेते हैं हमारे पास एक कंपनी है. अब now we are going back. So ultimately tested enterprise would facilitate comparability and should be the least complex controlled enterprise of the 2. So this is the thumb rule. Least complex होना चाहिए. Now going back to our analysis. हमने देखा in this XYZ Inc. is providing technology and know-how. So that means they have intangibles. Intangible ko ab now finding a company which have similar intangibles would be very difficult for us. So therefore we chose ABC Limited, which is a least complex enterprise out of these 2 as the tested enterprise for doing this analysis. Now, as decided, ABC Limited became the tested tested party. How are we now? Now we will compare. Operating revenue we have 5,000 rupees ABC Limited, 3,000 rupees P Limited, and Q Limited 6,000 rupees. This is the operating costs. We have operating profits, right? Now these 2 are comparable. We found that in comparable companies, we have a profit of 5% and 8.33%. Now, assuming we only look at Q Limited and not P Limited, एक बार इसको आप इसको ignore करेंगे, so what you will see, ABC Limited is making lower profit as compared to Q Limited. But does that mean that the transactions of ABC Limited with XYZ Inc. are not at arm's length? No. Why? Because we have another comparable which meets all the requirements and it is making 5%. And when we take the arithmetic mean of these 2 PLIs that these 2 different comparables are deriving, we find that 6.67% is the arithmetic mean of the operating profit being made by similar companies in similar industry, and my tested enterprise have a PLI of say 8%. So now since 8% is more than 6.67%, I would say that this transaction with XYZ Inc. is at arm's length. Is everyone with me? You understand how we applied TNMM. This would also help Mr. I don't remember the name, Mr. Alakto, to understand how we do the entire comparability analysis. With me? Shall we spend more time on this or shall I move forward?
Gaurav ji, query then take up, otherwise we can move.
Sir, of strengths देख लेते हैं. Why TNMM? Net margins are less affected by transactional differences. As I said, when we are looking at the net margins, we have already taken care of a lot of differences in the expenses which may be incurred by different companies. So transactional differences, एकदम when we come on to the transactional level, उस level के differences हमें नहीं ढूंढने पड़ते, because it is in a wider spectrum we are looking at the comparability and not very pinpointed to the transaction. Then TNM can be applied to both sides of the control transaction. Tested party can be the Indian company as well as the AE, obviously. Now again, Indian courts have said that Indian party has to be the tested party. There are conflicting views also. Some courts have also said that you can use the data of, you can use AE as a tested party, but subject to proving that it is the least complex. Right? So लीस्ट कॉम्प्लेक्स कौन होगा? जिसके पास लिमिटेड इंटेंजिबल्स होंगे. अब मान लीजिए दोनों के पास इंटेंजिबल हैं, तो किसके पास ज्यादा इंटेंजिबल्स हैं या फिर किसकी फंक्शन ज्यादा कॉम्प्लेक्स हैं? तो फार we will go back to the far and see what all functions are performed by both the parties, whose functions, risk and assets are more complex in comparison to the party, and the least complex party would be chosen as the tested party, irrespective that is an Indian party or a foreign party. Now this is a very important and very interesting part of TNMM. मान लीजिए आप AE के साथ you are doing 4 or 5 transactions and all these transactions are interlinked. Say Indian company is providing services to a foreign company and foreign company provides technical know-how, brand name, and technical services and certain softwares for providing these services. Now, if you see transactions, all these transactions are interlinked. For providing service, I need the technical know-how. I need the technical services provided by the people in the parent entity. I also need the softwares. So all these items or all these transactions provided by AE between the AE and the Indian entity are closely linked international transactions, and they all can be clubbed while benchmarking under TNMM approach. So I don't need to do different benchmarking for all 4 transactions until and unless all 4 of them are not directly linked to each other. Right? So the thumb rule is there have to be a lot of transactions with the AE, and all these transactions are interlinked. If they are interlinked, I can aggregate all those transactions while benchmarking and finding the net margin of the at the entity level. We'll find the net margin at the entity level, and if the net margin is in accordance with the net margin of the comparables, then all these transactions are considered to be at arm's length. Fair enough. Now, use of single year data and contemporaneous data, internal TNM. I'm not discussing all this because this is going to be too technical. Aggregation of transaction we have already discussed in brief. Filters we have already discussed while explaining to that gentleman. Qualitative filters kya hote hain? I'll just tell you in brief here. So where there are functionally different companies. So I told you that while choosing the companies, I have a set of say 20, 25, 30 companies. I'll see whether these companies are functionally different. So by functionally different, whether they perform the similar functions that my company or the tested party performs, or whether they have any exceptional year of operation. Is there any merger, demerger, or business reorganization, or for that matter, is there any impairment during that year, or if that company is being, change in management. All these exceptional issues have to be seen while functionally disregarding the transaction. If, say, for example, they have done some merger with a smaller company, they have acquired some company and their sales have shot up considerably. So a company that was doing a sales of say 500 crores have acquired another company and now their sales are say 1000 crores this year. So these are exceptional years. So any data, any company that would have these exceptional items will have to be excluded from the comparable data. Now, quantitative filters would be in the nature of a turnover filter. I told you what turnover filter is. So I am a company who is doing say turnover of say 100 crore rupees. I will not compare myself with a company which is doing a turnover of say 10,000 crore rupees because they are too big. They would have economies of scale. They would have different a proper way of doing things as compared to what I have. So they would be more efficient in making profit. So their profit would maybe more than what I am making, because a smaller company would have their share of issues and their share of mistakes that they make to grow big. So being a small software company, I will not be comparing myself to Infosys or TCS of the world. So this is something which is to be seen. So turnover filters helps us there. RPT filters. So if some company is having a substantial amount of related party transactions say they are doing a lot of transaction with their related parties. So in that case, related parties could be Indian or foreign both. So if they are doing a lot of related party transactions, their transaction is not a uncontrolled transaction. So you cannot rely on that data. There may be a less profit being allocated to this entity while you are doing the benchmarking. It would throw up wrong results and it cannot be treated as a comparable company. So therefore we can say that RPT filter should be it should be reasonable, and some courts say 15%, some courts say 25%. So anywhere between this percentage, if any company have more than 15 to 25% of related party data or related party transactions, that has to be excluded. Rejection of loss-making companies. So when we say rejection of loss-making companies, there are certain exclusions. For example, American Express or in Delhi tribunal, Birla Soft. Few cases wherein the tribunal held that loss-making companies cannot be outrightly excluded just because they have loss in 1 year. But you will have to exclude companies who are making losses consistently. So if you see last 3-year data, all 3 years were in losses, that company obviously cannot be considered, because the bench said that any independent company would not be running business to incur losses. Ultimately, either they are working towards the future profits or they are making profits. If they are not making profit, they would eventually shut down. So there have to be profits, but if it is a 1 year profit, 1 year loss, a company is having loss in a particular year, that cannot be, that should not be rejected just because it has losses. Supernormal profit making companies, again, as discussed, these are to be excluded. non-commercial entities, obviously, when we are benchmarking a business transaction, we cannot consider non-commercial entities or not-for-profit organizations. So that cannot be the case. As I say, loss-making companies as comparables can be considered as held in Sony India, Teva, and a lot of different judgments. See, non-operating income now. This is interesting. Considering one company as a comparable for application of CUP as the most appropriate key favorable. So, one company as comparable for application of TNM as most appropriate method is allowed. So that is when we run the entire search process and ultimately you only have one company which clears all your filters, whether it is the turnover filter or RPT filter or the functional or the qualitative or quantitative filters. After applying all those filters, if you are just left with one company, that is also allowed to be used as a comparable under TNMM, and there are certain favorable judgments. But generally, if you ask me, practically that does not happen. You would always have a lot of companies as comparable. Practically, it does not happen, but it is just for the sake of completeness. This has been entered, and non-operating incomes obviously have to be excluded, because if you are taking up PLI as operating margin, so PLI is profit level indicator. So whenever I take up profit level indicator of, say, operating profit over operating costs, or operating profit over operating turnover, operating profit over operating turnover, yes. So in that case, you will have to exclude the unoperating or non-operating incomes and expenses, because that would not give you the operating profit then, right? So these are a bit small challenges of TNMM, and more or less TNMM is the most used method in India, and generally where no other method is used, we can always benchmark a transaction under TNMM. Coming on to the other method, there are certain transactions which are not benchmarkable under other methods that we have discussed till now, the 5 methods that we have discussed till now. Other methods are used where the transaction is in the nature where you cannot find a comparable as such. So say, for example, there is no other transaction available. So very unique transactions. So for example, I bought something from a AE and that is not available to me. So till the time I have not entered into any other transaction, I cannot find. So I'll find probably a third party quotation of the same product, and I can compare that quotation with the price that I have paid, or probably the valuation reports like shares. If I purchase share of a AE, so how do you benchmark this? This is not benchmarkable otherwise. So you will go by the valuation reports. So in other method can be used in such transactions where there is no other open market transaction available, or no other transaction available for you to benchmark that transaction. So I'll just give you a summary. This is just a recap. So when we say cup is comparability is very high, prices are benchmarked and not the margins. And it is very difficult to apply because there is very high degree of comparability. Like I said, you will have to compare with similar quantities, quality, similar goods, and you will also have to take care of whether it is a seasonal good, you are not buying it from different geographical locations. So everything needs to be seen, and then only you can apply a cup. Similarly, RPM, the comparability is high. Again, it is on gross profit margins. Difficult to apply again due to it is high degree of comparability required, because finding a person selling similar item to an unrelated party and then finalizing its gross profit margin would obviously be difficult. So this is the issue. So application of direct method is difficult just because the comparability is very high, and that makes them the most sought methods as per OECD. So there are two sides of the coin. So first is that it becomes very difficult to use these methods, right? Because there is high level of comparability. But at the same time, since there is very high level of comparability, they give you the best benchmark as compared to the other methods, which are the transactional net margin methods or the PSMs. So the direct methods are better methods as compared to the transactional methods. And other method obviously is the residuary method, that is to be used only when you are not able to apply all these 5 methods. Selection of tested party we have already done. Profit level indicator we discussed during this analysis. Now this brings me to 3CB, and 3CB it is very important to discuss it here, because all our professional colleagues who are attending this would be signing a lot of 3CBs during the compliance season, and it is important to know that what is to be reported, what is not to be reported, and how to safeguard the interests of the professionals while signing a 3CB. So it is a specified report under section 92E. First of all, there is a misconception that I come across very regularly, that is there any threshold to file 3CEB? So in case of international transactions, so let me make it very clear. In case of international transaction, there is no threshold, even if there is a transaction of 1 rupee with the AE, and it is an international transaction. In that case, you will have to file 3CEB. And if that transaction is taxable in India, you will also have to file 3CB of the foreign company in India, and you will have to apply PAN. So these are certain things which we generally miss, and there is a general conception that till 1 crore rupees, you are not required to file 3CB, whereas that threshold is only for maintaining a contemporaneous documentation or a TP study, and not for filing 3CEB. Again, it is a threshold for maintaining TP study and not the documentation under Rule 10D. You'll still have to maintain invoices and the agreements and all those information that may be asked by the TPO whenever he asks for whenever there is a transfer pricing assessment. And if you have not maintained all these documents, there is a penalty of 2% of the international transaction. So it becomes very important to understand this. Have to be filed online. Now ड्यू डेट ऑफ फाइलिंग पुराना है सर, सॉरी 31 अक्टूबर हो गई है. तो 31st October is the due date of filing of 3CEB in case of companies where the TP is applicable. So who is to file? Residents and non-residents both. Foreign companies जिनकी ब्रांच या पीई इंडिया में है उनको भी फाइल करना है, राइट. एग्जेम्पशन ऑफ 3CB नहीं है. ओनली इन द केस ऑफ स्पेसिफाइड डोमेस्टिक ट्रांजैक्शन इट इज टू बी फाइल्ड वेयर स्पेसिफाइड डोमेस्टिक ट्रांजैक्शंस एक्सीड 20 crore rupees can be filed. अच्छा, एक ये there is also another misconception which I come across regularly is that is it to be filed only by the statutory auditor or any CA can sign it? So any CA can file Form 3CB irrespective whether he is a statutory auditor or not. It is as good as a tax audit, can be filed by anyone irrespective whether that person is a statutory auditor of that company or not. Right. And what happens? So it is a very important question. How does the accountant deal with the financials if the statutory auditor have made qualification in the audit report? What you would do? Anyone? Please, sir, let's make it interactive. Sir, anyone? What would happen if the statutory auditor has given some qualification while signing the audit report. What to do? Because you will rely on the audited numbers while giving the form, while signing the form 3 CEB. Yes, it should be considered, but what to do? Will you, so say for example, in the audit report, there is an emphasis of matter paragraph saying that the transactions, the sales of the party cannot be verified, and therefore we are not expressing any opinion. So what will you do? You have to rely on this balance sheet while filing 3 CEB, and you have to report the international transactions. There is a specific column to give your qualifications while filing form 3 CEB. You need to qualify it accordingly, citing the audit report, and also mention that due to which your report, you are also not expressing any opinion on your report. Right? You will also have to obtain a MRL from the management saying that this qualification, whether it impacts the international transactions or not, and accordingly. So this is how the form 3 CB looks like. Opinion as to whether prescribed documents have been maintained in the and the particulars in the report are true and correct. Sir, who will tell me what are the prescribed documents? Anyone? Now it is becoming interesting because till now we were only doing a lot of, bookish kind of knowledge, but this is practical. We do it day in, day out. Please participate. What are the prescribed documents we are talking about here? Nobody. So prescribed documents as per section 92D and Redville rule 10D, we'll have to go by those prescribed documents, and we are not talking about the books of accounts here. So these documents as prescribed under rule 10D have to be looked into, and you will have to form an opinion based on those documents. Ownership, yes, correct, Rashi. All the control been established. Cases where books, accounts of foreign companies are not available. What will you do, sir? I have examined the accounts and records of so and so relating to the international transactions, whereas you don't have any books of accounts of the foreign company. What will you do? So a foreign company who does not have a PE in India is not required to make books of accounts in India. How do you mention it here? Will you say, yes, you are looking into accounts and records of the foreign company? Do you have any access to those accounts? No. When it says accounts and records, it does not refer to books of accounts. It refers to the transaction details. So you don't have accounts, but you always have the agreements, the invoices, based on which you can define whether the transaction is at arm's length or not. So these are the things that are to be looked into while filing 3CEB. Needs to check whether the proper documentation was maintained. You will have to see whether 10D rule 10D has been complied with. Rule 10D have been complied with, and is there anything, any prescribed document which was to be maintained is not maintained, you will have to qualify your 3CEB. Right, sir? So these are the some clauses of 3CEB. So first clause talk about sale of raw material consumable. So any transaction in respect of purchase and sale of any traded or finished good will be reported here. So this is the old form. These days they also ask for TIN number and address of the related party. Rest remains the same. Here you will have to mention the quantity purchased, sold, and what is the amount paid for the transaction, and whether this transaction is at arm's length. What is the arm's length price? So if it is the same price, then you will mention the same price. Otherwise, you will compute and mention the price that is the arm's length price. Similarly, transaction for sale purchase of raw material and finished goods, both of them. And third is for the tangible property, and this would include your capital goods. So if you are buying capital goods from your A, that would be included here.
Gaurav sir, please keep closer to your mic. Sometime your voice is not clear.
Okay, sorry. The next is clause number 12. This talks about the royalty payments, intangible properties. So wherever you are dealing with companies who are paying certain amounts towards royalties to their A's, this needs to be reported here. Again, you will have to disclose the nature of the intangible property and the nature of transaction. And once that is done, you will also have to report your arm's length price and the transaction price. And what is the method used for benchmarking these transactions. Similarly, services, and similarly, your financing, corporate mutual agreement, and one important, when I talk about clause number 19, clause number 19 includes your reimbursements. So reimbursements would ultimately impact the P&L of the parties. So accordingly, they should be reported. And if it is a cost-to-cost reimbursement, it should be benchmarked by CUP method, because ultimately there is no margin which is being earned by either of the parties. So it is a third-party transaction, which is ultimately a comparable transaction. And we must also report the amounts receivable and payables in the 3CEB, because ultimately that impact your balance sheet. So when we talk about international transaction in the last session with Naman ji, he told you that anything that impacts your balance sheet, assets or liabilities, would also be an international transaction. So accordingly, your payables and receivables would also be an international transaction, which needs to be disclosed, which needs to be reported for disclosure purposes primarily, because ultimately the penalty can be levied on it. So it is always, the conservative view is that you should always report it. So now we are coming on to the TP documentation part, and I guess I am almost on time. So in documentation, we need to see the ownership structure of the both the parties and the profile of the multinational group, along with the business description, to understand what exactly the companies do. Right. So and this is the first part. The second part is price related. So price related, you will clarify the terms and the nature of the transactions. What is there any description regarding functions, assets, and risks, and also record the economic and market analysis. So economic analysis would be the transactions with. So when we do the economic analysis, we will find out the comparables under that on certain softwares, and we'll discuss this in this particular part of the TP documentation. And if there is any other record or analysis available, which is in the nature of transaction, international transaction with uncontrolled people. So it is not transaction, it is uncontrolled persons. So that is deemed transactions. That is also to be mentioned here. And description of method. So most appropriate method, how you have chosen it, and description of that method, that how, why and how are you applying that transaction, that transactional method to that transaction to justify your arm's length price or calculate your arm's length price. And finally, your transaction related information is to be given in the nature of transfer pricing adjustment, if at all you are making any. So there may be situations where the transaction price is less than the arm's length price that you calculate or you arrive at. In that case, you will have to make certain primary adjustments and other information, that what all data have you maintained as per rule 10D. So this is rule 92D and OECD TP guidelines. So this is a basic summary. I don't think this is necessary to be discussed. Thank you. Thank you very much. That's all from my side. I'll
Yes,
open
Gaurav ji. जी. Wonderful presentation, Gaurav ji. I also request कि अगर किसी की कोई query है, तो they can ask before closing of this 3 days conference. And I hope everyone has enjoyed each and every session by the eminent expert on the different area.
सर एक क्वेरी है, ये मेरे ख्याल से आंसर नहीं हुई थी. ऑप्टेड फॉर सेफ हार्बर रूल, देन स्टिल टीपी ऑडिट इज रिक्वायर्ड.
Yes, सुनील जी करिए.
3CEFB फॉर्म फाइल होता है, 3CEB तो फाइल नहीं होता है उस केस में, because when you have opted for the rule, 3CEB is not filed.
इसमें सर थोड़ा सा मेरे ख्याल से वो है, क्योंकि दोनों रूल्स में ना 3CEF वाले रूल में ना 3CEB वाले रूल में कहीं पर भी एक्सक्लूजन नहीं है. सो
एक्सक्लूजन नहीं है, हम ठीक है, एग्री. सो बेसिकली व्हाट पीपल डू इज on a conservative basis, they file 3CEB, but
right.
If you read the intention, so ultimately safe harbor rules were brought so that a person have the clarity that arm's length is already agreed. So 3CEB is filed where you are determining the arm's length price. And in case of safe harbor rules, you already have the arm's length price with you. So that is also the case with APAs also.
Right. Yes, well, I agree कि conservative basis पे ही वो करते हैं, and if we go by the legislative intent, there is it should not be, ideally it should not be required, क्योंकि safe harbor की भी legislative intent ही वही है to
avoid any litigation, right,
to the smaller taxpayer.
Yeah.
That is there, but still क्योंकि वो दोनों rules में या कहीं पर भी exclusion वगैरह में नहीं लिया है, लिखा हुआ है ना कहीं clarification है, तो conservative basis पे 3CEB जरूर फाइल कर देते हैं, but PP रिपोर्ट लोग नहीं बनाते.
रिपोर्ट नहीं बनाते, करेक्ट, क्योंकि उसमें you have already opted for certain percentage, and that percentage is your arm's length price.
Right. Any other participant if has any question and all?
Yes, today is the last and closing session, closing
and
time.
We also invite invite suggestions for going forward. If we want to carry out this kind of session on international taxation and transfer pricing, we would like to invite suggestion from the participants on particular topic, if they think that if any particular topic is required in vice agent,
additional derivation required, then definitely we can plan more session, more webinar on other issues. and I will mail tomorrow for your feedback, so that you can mail us to your feedback if you cannot post right now.
Yes.
जी सर एक क्वेरी है गौरव जी, प्लीज आस्क. Name is not clear. Alakatu. Please ask your query, miss. Okay.
Unmute yourself, please.
Any other participant have any query? So there is no query. We
Can you
should
hear me?
close just a minute.
Can you hear me?
Yes,
Yes, we can hear you.
Okay. My name is
Yes.
actually Olokto. It's a Bengali name,
Okay,
difficult
okay,
to
okay.
pronounce, I understand.
Okay. Sorry to pronounce your name.
It's all right. I have
I'm
two
also
questions
sorry to
actually.
mispronounce that name. Sorry.
No, it's all right. I have two questions actually. One is this 1 crore limit that you have suggested, does that include or exclude value of sale proceeds of equity share if it has been subscribed at a face value? For example, share has been sold for say 10 crore and there are other international transactions worth say 50 lakh. So would this be aggregated to test whether this has exceeded 1 crore?
So rather than going to this, I'll first come back to the question, and so there is another limit to it. In case of sale of shares, there were certain rulings of Vodafone earlier, which were saying that TP is outrightly not applicable on such transactions. So considering that, there was a view which was formed that you just need to file 3CV and you don't need to maintain a TP study for such transaction, because everything is very obvious from the valuation reports and all the filings that you would made with ROC. So TP reports as such, the TP studies are not required. So and when you say 1 crore limit, it just says the transaction value or the international transaction value. So even if it is at face value, that also becomes the international transaction value. So if you ask me, I would suggest that you don't need to make a transfer pricing study as such for the purpose of sale of shares, but do file 3 CEVs.
So the other limb of the question was, but there are these other transactions of 50 lakh rupees.
Okay.
So for this Vodafone ruling, I completely agree with you that for the share sale TP study is not required. But since there are two sets of transactions, say one for consulting fee or one for sale of share, consulting fee 50 lakh, sale of share 10 crore, then for that 50 lakh worth consulting fee, would there be a TP study required?
In that case, I would suggest you aggregate both the numbers.
Okay. Great. Thank you.
So Gaurav ji, it is time to conclude the today's session. I request Amit ji to say formal vote of thanks.
Yeah.
Any kind of feedback you can.
So I would like to thank both of the speakers, Naman ji and Gaurav ji. So it was wonderful session from both of you, particularly when you are touching the basics of the subject, which is generally very rare in the subject in the webinars and discussions. So from Namanji's session, we understood the examples of Bunty Bubli and Virat Anushka. He also touched upon the Preetham case of copyright and all. And in Gauravji's presentation, my pick was that the simplest form of examples. I think they were in the line when we read some guidance note from the institute. Generally, it also picks up same kind of examples in a very simplest manner. So that was great part, and there was a lot of learning about, particularly when you touched upon the foreign companies when they are filing Form 3CB, their accounts and records, etc. So that was very basic nuances which generally are generally crosses our mind when we are filing Form 3CB and doing the TP compliances. I hope all the participants have also enjoyed the sessions. This was a very wonderful session, and a lot of learning was there. And on my behalf and on behalf of all participants and CASA behalf, I would like to thank you, both of the speaker, and to the all would like to convey my thank to all the participants for their patience listening and making this session very interactive and very successful. So in my view and in Sumitji's view, we have achieved our target of sharing the knowledge and making this interactive session. And so thank you again to all of you. As I earlier said that suggestions are welcome on the International Tax Forum. Like most of you are the part of our International Tax group also. So if you are not, please WhatsApp your number to the Sumitji. We will add you to the WhatsApp CASA International Tax group. And in case you have any suggestion, any question, you can reach out to any of our speakers anytime. And you can write to Sumitji or me as well. And we will also try to take your questions and would like to make the professional commitment as much as interactive as possible. So thank you again. So concluding remarks, I would like to forward to the Sumitji.
No, sir, Amitji, thank you so much, and well said. We will share any type of any kind of feedback. You can revert to me, and definitely it is a wonderful experience. In 3 days, we have learned 9 hours plus study, and we have learned a lot of things in international foreign clients. So definitely, we'll plan more sessions of such type. So thank you, Gauravji, once again. Thank you to all participants. Thank you, Sunilji. Thank you.
Thank you.
Thank you, Sumitji. Thank you for
Thank you,
having me.
everyone. Thank you.
And
Thank
thank
you.
you for making me interact with such a able audience. And special thanks to Sunilji, because you were interacting the entire presentation. So that keeps us motivated for the rest of the session.
Yes, yes.
Thank you,
Sunilji is
thank
very
you.
much
Thank you
active.
too also,
All
sir.
3
Thank
days.
you.
अगर मोस्ट एक्टिव अवार्ड दिया जाए तो सुनील जी बिल्कुल always active,
Thank you.
and
Thanks to you
especially
all
in village
organizing this
also.
program and all the
Thank you,
speakers.
Ajay ji.
Thank you.
Thank you all. Thank you.
Thank you.